My experience working with Axis, I would describe it as extraordinary experience.
Axis has a passion and a strong desire to see pension assets impact the real sector economy.
It's been extremely professional. If you look at Axis's background, they have very well-grounded experience there.
They stand out. And you could see some trust in Axis.
Axis is unique for their preference for alternatives and how pension assets are deployed in the industry.
They have a very robust system that they can deliver on their mandate. We see more improvement. They make adjustments to their systems to reflect the current trends and the regulatory framework of MPRA.
I think from a tech perspective, my personal experience, their portal has basically everything that you need over there. In an era and in a country where there's not a lot that is given in terms of disclosure, you'd realize that Axis goes above and beyond.
What sets Axis apart in the pension industry is their customer-centered activities.
My experience with them, what set them apart is simple: delivery.
The team is very competent, both board and management.
You don't need to call them twice. You call them once, they'll be there to resolve the issue for you.
And that delivery is something that is always, when I see them, that is what comes into mind.
Did you know that over 70% of retirees exhaust their retirement benefits in 3 years? Without a solid plan in place, you risk depleting your savings prematurely, leaving you financially vulnerable in your later years. But your golden years can be better with the right plan. The Axis Retirement Income Plan is here to guide you towards financial security and peace of mind. Convert your lump sum benefits into guaranteed monthly income, tailored just for you. Choose between flexible payout options backed by expert guidance to secure your financial future, because your golden years should be full of peace, not worry. Add a golden glow to your golden years by enrolling on the Axis Retirement Income Plan and enjoy the retirement you deserve. Call 03-0273-8555 to speak to a pension advisor today. Axis Pension Trust, your reliable partner in pensions.
Dear future me.
Dear future me. Dear future me. I hope you are living the life you dreamed of. Finally, running the business you've always wanted, waking up each day with purpose, and enjoying the freedom you worked hard for. I hope that your efforts over the years led to a life well earned.
I hope life didn't get too busy, that you finally got to travel and see the world, to feel the ocean breeze and enjoy the feeling at the top of the mountain.
I hope you built the home you always wanted. A place where every corner holds a memory and every wall tells a story. A haven filled with love, warmth, and family.
Your future self is counting on you. Fulfill your promise of a better tomorrow by taking action today. Start saving with Axis Pension Trust to achieve financial peace of mind. Visit www.axispension.com/futureme to learn more. Axis Pension Trust, your reliable partner in pensions.
My experience working with Axis, I would describe it as extraordinary experience.
Access has a passion and a strong desire to see pension assets in
Good morning once again, and thank you so much for waiting for us to start this program. We are very excited to bring your way the Access Pre-Retirement Seminar this year also. Our plate is packed. We've got insightful presentations and a panel discussion that we know you are going to benefit from. So please don't go away. Reach out to a friend, a colleague whom you know would benefit from this program, and let's all do this together. So to start our program, we'd want to acknowledge God, and to do that, we are going to take an opening prayer and would call on Miss Pamela Anyagre to give us the opening prayer. Thank you.
That everything we do here today will be to the honor and glory of your name. In Jesus Christ's name have we prayed. Amen.
Amen. Thank you, Pamela. Okay, so getting to the purpose of the day, we want to call upon the General Manager of Access Pension Trust to give us some opening remarks to really usher us into our program for the day.
Retirees, good morning to our facilitators, and good morning to everybody who made time to join the call. I have the greatest pleasure to welcome you to Access's 2025 Pre-Retirement Seminar. This has become a landmark in our annual calendar, and indeed, a defining moment in the lives of each one of you who is preparing for the next important chapter, which is retirement. As we come together to think and plan for retirement this morning, we do so at a time when Ghana, like many nations around the world, continues to navigate a period of macroeconomic adjustment and recovery. Steady resilience, where we see inflation has begun to ease, currently sitting at 9.4% year on year. Comparing that to where we were in 2024, of around 21.5%, same period, is a very substantial drop in our inflation figures. For the first time in recent history also, we have seen the cedi appreciate against its major trading currencies. Remember when we started the 15 cedis to $1, now at just around 12 cedis. And that is quite an exciting feat for our economy. tools might need to approach retirement. I don't want you to approach retirement with fear, confidence. Retirement be seen as an end, but as a new beginning, a time to rediscover purpose, deepen relationship, and live with dignity and peace of mind. Over the next few hours, we have an exceptional lineup of resource persons and experts. We have representatives from SNIT, House representatives from Axis, who will help us understand the dynamics. Hello? Who will help us understand the dynamics of the three-tiered pension scheme. They would also help us to understand how we can access benefits when we are due. We also have lined up investment experts to let you know some of the investment options that is available to you once you go on retirement. We have additionally brought in a medical doctor who has expertise in geriatric care. For information, geriatric care is just like we have pediatric care for doctors who take care of children. Geriatric care doctors are for those who are older and above 60 years. So this our expert doctor will share practical insights on how to stay healthy, active, and mentally strong throughout retirement. Because a good retirement is not just about money, if you bear with me, it's about quality of life. And perhaps most importantly, we'll hear from someone who has already walked the path. A retiree who will share her personal journey, the lessons she has learned, and the advice she wished she had received before she went on retirement. As you participate, I encourage you to engage fully, ask questions, share your expectations, and take notes. This is your time to prepare, reflect, and plan meaningfully. In closing, I want to remind you that retirement is not the closing of a door, but the opening of a new one. At Axis, our pride and purpose lie in ensuring that when you walk through that door, you do so prepared, empowered, and fulfilled. On that note, I warmly welcome you once again to this pre-retirement seminar. Thank you for your dedication over the years, and thank you for allowing us to walk the journey with you. And may the seminar retirement journey. Thank you.
Thank you, Pa Kofi. Thank you so much for outlining the reason for our gathering today. Like I said earlier, we have some insightful presentations outlined for us. So to take us in our very first presentation, we have the Deputy Public Affairs Manager of SNIT, in the person of Mother Jemima Ofori. Shall we welcome Madam Jemima?
Just the social insurance scheme that we have in Ghana. It's amazing that anytime we have to engage people, we get to hear new things we have never heard before. But we always assume that social security in Ghana is everybody, but we keep on getting different thoughts from people. So I always say that this will just allow us to have a deeper discussion as we always do. Okay. When Pa was talking, he made mention of pre-retirement. Yes, it's true that we do this annual pre-retirement seminar, but for me, I won't call it a pre-retirement. It's a retirement seminar in the sense that no one is far away from retirement. Even if you are 20 years, retirement will still come. Sometimes when I look back, I get amazed that I've already worked 13 years already with SNET. But some few years, I thought that retirement would be far away from me. But I'm 13-year-old, so it means retirement will approach very soon. We'll look at it and then try and get ourselves, refresh our minds with some of the things that we know. And with our cherished viewers and listeners, we can have discussions after our presentation. So basically, what SNET does, or what SNET is about, is that SNET has been mandated by law, the laws of Ghana that governs every other institution in Ghana, has mandated SNET to collect first-year contributions. So when I say first-year contributions, it means that we are responsible for paying monthly pensions. So whenever you hear SNET, what comes to mind will be payment of monthly pensions. And SNET will only come in to pay you a part of your lost income. Let's take notes that it is not salary that comes to SNET. It's a percentage of it. So as we go along, we'll get to know. So once it's a percentage of it that comes to SNET, obviously we will have to replace a part of the income because you remitted a part of it to us whilst in active service. And it is only in these three contingencies that SNET will come and replace that part of your lost income. It's got to do with death, it's got to do with invalidity or disability, and then what we already know, old age retirement. It's interesting to know that when you want to talk about death and invalidity, people are not interested. What they are interested in is, I want to quote on unquote chop my own money. So that's what they are interested in. But SNET is not there for you to only chop your own money when you retire, but to also replace a part of your lost income when death occurs and then when you are incapacitated. And this scheme covers self-employed workers. Once you are your own boss and doing your own job, you are your own CEO and you do not account to anybody but yourself. You have your own tabletop things you are selling, you are your online worker, you are a self-employed person. And so you are eligible to join the SNET scheme. And then the formal sector workers, where most of us are into or have ever worked with, also contribute to SNET. And this is it. You can join as young as 15 years, and then you can join as old as 45 years. So it means that as long as you start contributing to SNET from the age of 15, it means you are on your road to retirement. And then we'll also register workers or employees working for them. So let's take notes. If you are listening to me and you have your own job and you have employed people, you are supposed to pay for yourself and pay for them. Not paying for only your family members or relations in the business, but outsiders who are also working for you. Very important. After this, once we have registered you, we collect contributions. So we are careful not to use, we collect monies. In SNET, we don't call it money because it's not the entire let me say, cash or income that comes to us is contributions, because it's a percentage of it. Once you collect the contributions, everything about you being an employer or a member, we manage the records, everything of yours. Managing of records is important because you will not be able to get to the point where you will chop your own money and death will occur. So we have to manage the records. Something can happen to you whilst driving, an accident can occur, a medical condition can render you invalid, and so we need to manage your records so that in such contingencies we pay you. And then investment of excess funds, obviously every institution finds various ways of managing excess funds so that the scheme can go on. And then ultimately, we will come and process every benefit due you once you have attained the age of getting a pension, or once death occurs, or once accident occurs. We are there to process and pay. All right. So the modalities are that employers are to pay 5.5% of the worker's basic salary. So workers' basic salary here should be on monthly basis. If you want to do a quarterly payment for your workers, it's allowed. 1 year ahead, it's allowed, but technically it has to be on monthly basis. It is not 5.7 and it's not 4.3. It's 5.5% of your workers' basic salary each month, and you remit to SNIT. That is from your employee's salary or take home. And then as a business owner or an employer, you are to remit 13% from your own coffers, adding up to the employee's 5.5 to make a total of 18.5. This is how it works. After you get the total of 18.5, the employer has to remit 13.5% to SNIT, and then the 5% goes to second tier. Second tier fund manager of your choice. So in regarding second tier has got nothing to do with it. Goes to second tier, they also have to manage it and then make sure that when you go on retirement, the lump sum is paid to you, while SNIT takes care of your monthly pension payments. As I mentioned, if you are a self-employed person, there's no difference in how you have to contribute to SNIT. It is the same thing. So whilst the employer is paying on behalf of a worker, because you are your own boss, you pay for yourself. So this is the difference. Because as a business, as a self-employed person, or as a person, an individual doing your own job, you are not accountable to anyone. Sometimes salary, such people do not even receive salary in the first place. Okay, so because they are paying themselves, their money's come and all that, they know how much in a month, an approximate amount they get from their businesses. So for example, a fashion designer can say that I have followed the trend, and in the past 4 to 6 months, when I get the monies from my clients, I'm able to get an aggregate of, say, between 700 and 1,000 cedis monthly. So based on that, such a person can come to SNIT and say that, you know what, I think that I can pay SNIT contributions on a salary or a declared amount of 800 cedis in between. Or the person can say, I think I can pay 1,000 cedis, a contribution percentage from 1,000 cedis. Once you declare that amount to us, you are also expected to pay a 13.5%. That's your first year to SNIT. Again, you can also join any second tier fund manager of your choice and do a 5% of that as well. It is flexible. So when you go to our outstations where we have SNIT branches and offices, you will see there's cocoa farmers and cashew farmers always coming to pay their contributions ahead, because the type of business they have is seasonal. So they know that as for this year, I'm going to get a lot of money. Once they declare that salary, the system or the law will allow them to pay even 1 year ahead. And in this payment of 1 year ahead, I think it helps them. Most of them are able to say that I know for the year 2025, for example, paid my SNATE contributions. And because SNATE is not a savings and loan scheme, and it's not SUSU, you cannot pay 700 today, the next time you pay 720, the other time you pay 600. Once you have declared, you pay in that order, so that in the following year, if you want it as a self-employed person, you declare to us, and then we take the SNATE contributions accordingly. As I said, salaries are adjusted annually for formal sector workers. It's true. So if you're also a self-employed person, you can also adjust your payments of contributions at the end of the year. A corporate trustee of a choice, when it comes to tier 3 payments, is voluntary. It's voluntary in the sense that the law will allow you to beef up your retirement package as an individual. Whereas the tier 1 and tier 2 is mandatory, tier 3 is voluntary. However, it gives you up to 16.5% tax exempt to also contribute into a private fund manager of your choice. And then when it comes to the same corporate trustee of your choice being the second tier, if you are working for someone or an institution or an organization, you are expected to talk to your HR or anybody in charge of your tier 2 should I say, the funds that come out of there, so that they can explain to you how it works. And then your tier 2 fund manager can even, that's how it's supposed to be, but sometimes we get concerns from people that my tier 2 fund manager, I do not know, I don't even know how it works, I can't get statement for myself and all that. So once you are an employee, it is your right to ask how this tier 2 funds are doing, so that they give you monthly statement, just the way SNATE also does. One is listening to me or watching me here, I know that 95% of our members and clients will agree with me that once you have updated your records with us, we send out quarterly statements, both SMS and mails, and you will be able to track how your SNATE contributions are doing. So I said, once 13.5 comes to us, this is it. Obviously, it is not the entire 13.5 that SNATE will manage. We will only retain 11% out of that, and then 2.5 is given to National Health Insurance Scheme. So the concerns that we get all the time, I do not use National Health Insurance. SNATE, why are you deducting me? Unfortunately, we do not have a choice than to use it, because the laws of Ghana has allowed us or mandated us to do so. Everybody who is a SNATE contributor or pensioner has a percentage that goes to National Health Insurance Scheme or authority. So what must you do before you retire? We are talking about pre-retirement or a retirement seminar, so that we all get the information on how we can be financially free or financially independent when we are young and weak and frail. So before you get to that point, what must you do? First of all, ensure that your SNATE biometric registration has gone through. As we stand here, if you still have the SNATE old number, that is the 8-digit number, then you are far behind, because SNATE has evolved. And everyone has a biometric number, which is a 13-digit number. So as soon as you realize that you don't fall within a 13-digit number holder of a SNATE contributor, you quickly have to come to our nearest office so that we take you through that process. And then, as I said, 5.5%, not more and not less, of your salary must stand out as your SNATE contribution from your correct basic salary. So if you are taking bigger and fatter allowances, please do not think that it will reflect in your pension payments, because SNAID contributions are not paid on allowances, but on your take homes or your basic salary. So for example, if you are taking a 4,000 as your allowance and your take home is 2,000, SNAID is taking a 13.5% from your 2,000 and not a total of 6,000. And please inform SNAID if your employer underdeclares your salary. So some people will say that SNAID is not underdeclaring my salary, but I suspect that my other colleagues' salaries are being underdeclared. You can still report to us. We have a way of getting to every establishment to know whether the employer is doing the right thing or not. Unfortunately, in Ghana, the bad news sells faster than the good news. But what I'm coming to say is a bit controversial. The good news with us is that such employers who default are being prosecuted at the courts, and their names are being published in newspapers. And some of them are the big men, so they are afraid that their names will be there. As soon as you invite them over to court, they come to pay. And it will interest you to know that we make sure that they pay this defaulting contributions over the years plus penalties. They add interest. So do not condone and connive with your employer in cheating you. No matter the age you are right now, even if you are 57 years and you feel cheated because of what you have heard right now, please do the right thing and report to us so that we do the due diligence. Otherwise, it will affect your pension payments or your pension contributions when you finally retire. Please update your SNAID records. People change their names and SNAID is not aware. So changing of name will not only be because you have changed from being a Christian to a Muslim or from a Muslim to a Buddhist. No. Your change of name can also stem up from you being a single person and now married. So if you were Jemima Ofori, and now you are married and you have taken over your husband's name and you are now called Kabute, you should let us know that all your documents bear Jemima Kabute, and so you want the Kabute to reflect with SNAID. We will not know that you have married, so you have to do that change. You give us evidence of these changes of names, marriage certificates, gazetting in the dailies, and all of that. If you were using Expresso some 15 years ago, and you haven't updated your Expresso number with us, and we are still assuming you are using Expresso, meanwhile you have MTN, we'll be sending quarterly statements to Expresso and you won't know. So please update. And with your beneficiaries, very important, beneficiaries will be those you have used the very first time you register with SNAID and said that in my absence or when I'm no more, when death occurs, pay these contributions you have with SNAID to these people. You have to update them regularly. You can do them as and when. We do not charge. We don't ask you so many questions why you want to change. I call it the SNAID will. So if it is a will, please walk quietly into our office without anybody following you and do the updates. Once you die, your family will report and will pay their monies to the right people. Check your statement of account periodically. SNAID has gone high-tech. The world has gone technological. People do not have time to be forming long queues just to print physical copies of statements of accounts, which is why it's important that you update your email address with us. You can go to the SNAID app and then you view your statements. If you see something there that you are not so enthused about or you are not sure, then you can work in our office to let us do the rectification. In some soft copy of my statements. Can you print it and meet me at church and give it to me? Now they don't do that anymore. All they do is, I went to the SNAID app, I checked my statement, I saw this, can you explain? It makes life easier for everybody. So please do that. Again, this update of financial statements, if you've been very observant, you realize that It is the only thing that has been deepened in deep black ink. It's important because in this discussion of ours, it is your financial statement or your statement of accounts that will determine what you will get when you retire. So if you do not update, what it means is that you do not care whatever is happening to you when it comes to SNAID contributions. Updating here doesn't mean you are coming to increase your contributions or come to say that SNAID, take this 10,000 cedis and add to my statement of account. No. Update it in the sense that you print out your statement or you view and you are not sure of what you are seeing or you need explanation. Kindly let us know. You have worked with company A some 13 years back, but you printed your statement and there's zero contribution for you. You engage us, we also interview you, and then you explain to us where you have been in those years, why there's a break, whether you broke service and all of that. This is the updates we are talking about. Do not wait till you are 57, 59. But if you waited, it's still not late. You are not 60 yet. Come to us. Let us follow up with any employer who has not paid for you. And all these gaps will be filled. And then you'll be a happy person when you retire. And you have to contact a SNET officer so that you're assisted in at least knowing how to calculate your pension. But even this, you may not have to do that because when you go onto our website, we have a pension calculator or the pension estimator, that will ask you basic questions like your SNED number, how old you are now, the number of months you have contributed. You input all of those things as long as you have printed out your statement or you are viewed, you know this information. When you put it there, the estimator gives you something to hope for or to think about, okay, that's okay, when I'm to retire today, this is how much SNET is going to pay me as my monthly pension. Very important. Okay, so basically, I've already said this, but let me just run us through. Old age pension will mean that you must have contributed at least 15 years, or that's equivalent to 180 months of contribution, and you must be at least 55 years or more to access your old age pension from SNET. 55 years because the law will allow you to take what you call the reduced pension. Assuming you cannot wait till you are 60 years old, you are eligible to take your pension from us. The survivor's lump sum will be when Mr. Mensah was a contributor, but he has passed on. So if he's passed on, SNET cannot take everything and say that this person is dead. So it's not our money or it's not our contribution. So we pay to Mr. Mensah's dependents, and these dependents are the beneficiaries I spoke to you about earlier. Can be your children, your spouses, your mother, your father, any relation. In Ghana here, we deal with two forms of inheritance, matrilineal and patrilineal. So usually when people walk to our office and they want to update their SNET beneficiaries and they are not sure of what to do, we ask them, what is your system of inheritance? Is it the mother or the father side? At least when we ask you that, some clans also have dual inheritance, both mother and father. So when you say this to the member or client seated in front of you, it guides them and say that, okay, I want to use my nephew, my niece, my aunt, my uncle, anyhow you want to do it. And you apportion these percentages to a total of 100. So if you select 10 people, you will tell us how we should share the 100. If you use one person, the entire 100% goes to the person. And it is only after your death that survivor's lump sum is paid. And so, which is why we require evidence of death from family members when they come to report that so and so person is dead. We just don't get up and give monies to family members or relations because they've come to say that they've lost a member of their family who was a SNET contributor. No. So whenever you hear anybody say, my mother passed and my uncle passed, and SNET is becoming long, we will obviously be long because if we don't investigate, we'll pay the money to the wrong people. And then we also do payment of immigration lump sum. Immigration lump sum because we have foreigners working in Ghana here, and the law says that as long as everybody is working in Ghana, the law didn't say Ghanaian workers. It says workers in Ghana. So we have Europeans working in Ghana, Togolese, all nationals here. So when they contribute and their time is up for them to go back to their home country, we lump their monies together and pay them what you call the immigration lump sum. They won't come back, and so we cannot put them on monthly pensions. Obviously, they are not Ghanaian nationals, so you give them the lump sum and they go. We also have what we call the invalidity pension, which I think that now a lot of Ghanaians are getting to understand what it means. That if your doctor has declared you incapable of working because of mental or physical disability, you are to provide a medical report in relation to that kind of condition to SNIT. SNIT will let you go through a medical board assessment instituted by SNIT. It's a 3-member medical board team that who will assess you based on what your medical expert or doctor has given you. Once they approve of your being invalid, you are put on pension as though you are 60 years. What's this package or benefits will do for some people? It sounds so nice. So now people are trying to cheat the system by condoning and conniving with their family doctors to provide them with certain medical reports to say that they are sick. But what they don't know is that they will be examined. So please make sure that any medical reports you have presented is not questionable. You are indeed sick. And then once you go through the process, you'll be put on pension till you die. However, when you are better by divine intervention or from medical sciences, and you think that you can come back to work, you are allowed to come back to work and continue from where you stopped. And every invalidity pension SNIT has paid you will be scraped off as though we haven't paid you anything. You will still continue working and then you get your pension. It sounds sweet, isn't it? Okay. So with old age pension, I've already said that the scheme will allow you to get up to a maximum of 60% of your highest qualifying salary and a minimum of 37.5, as we see on the board on our screens. So in 2023, we had to pay 4.80 billion plus for old age pensions, and last year we jumped onto 6.25 billion paying of pensions. These are factors that will determine your pension. And as I said, once you go online and you put in the key variables, you are going to be asked all these questions. What is your salary being declared to SNIT, or what is your take home? So let's understand that as long as SNIT is not an investment scheme, but a social insurance scheme, the higher your salary, the higher your pension. It's that simple. So we'll consider that the amount you have declared to SNIT minus allowances. We are also going to consider the number of months that you have contributed. That's what we call the pension right. How long have you contributed to SNIT? And then your age as at retirement. Did you wait till 60 years before retiring? Did you say that I'm tired, so I want to assess my benefits between 55 to 59 years? It all comes to the calculation. Your early retirement means that you are between 55 to 59 years, 11 months. And because it is reduced, it will obviously attract some penalty, more or less. So your pension will be given to you all right, but it will be reduced. It's like going into contract with me, and then we both agree that have this pointer, I'll come for the pointer in 6 months. And then just when you walked out of this door, you come back and say that, Jemima, I've changed my mind. Give it to me in 3 days. Meaning you have breached the contract that both of us had. So that is why you have a reduced pension. All that I said in the earlier slide before this, That is what it means. So your average of your best 3 years salaries, I usually will say that the average of your best 36 months. Because if you say best 3 years or best annual salaries, it's quite confusing in the sense that some people have their best 3 years salaries at the tail end when they are about to retire. But there are others also who had the best working lives at the beginning of their lives because maybe the nature of their work had them getting huge salaries. Maybe the current work they are doing doesn't reflect such. So we go into your statement and pick the best 12 months. That is why I will call it the best 36 months. We pick 12 months from where your salaries were higher. We add it up, and that becomes your data on your salaries or your contributions. So when people come to our offices and they print their statements, it's interesting. They don't look at the SNIT contribution equivalent. They look at their salaries and they start shouting, hey, I have money. You don't have money. Don't look at that. Look at the contribution equivalent that came out of your salary. That will tell you how much you will get. And your pension right is obviously the number of months you have contributed. And the early retirement factor is the age as at the time you were retiring. That will give you the sack with the Ghana city sign over there. So when you look at the table here, we have years of contributions and then years pension rights. Yeah. People have worked more than 35 years, but unfortunately, the SNIT scheme or the acts that governing this law says that nobody can get more than 60% of their salaries when we are calculating pension. So if you have worked 35 years and above, you have a maximum of 60% of your salary to be used in calculating your pension. So if you have worked, for example, 20 years, you have a pension right of 43.1 going to be used in calculating your pensions. And then when you come to the age retirement factor in the table below, if you were 57 years and you said that you want to get your full pension will be at a percentage of 75% because there will be a reduction factor. Whenever I show this slide, I get a bit of controversies, but that's what it is. We scooped it from our data. And so it's an estimate that we have done. For example, we've seen that people who have salaries of 5,000 or less on our payroll are 1 million plus. And they're about 91% of our payroll getting that amount. If you take 550 or less, 550 Ghana cedis or less, we have like 3,000 people whose salary are between 550. So if you are in an institution where you will be able to talk to your authorities or employers to consolidate your allowances into your salaries, I think it will be of good to you because we once had a medical doctor who almost had a fight with our then Director General because his take home was 3,000 and his allowance was 5,000. But in his mind, I'm getting 8,000. So when the pension payment advice came, he was so upset and said that he needed to talk to the Director General himself. And he was schooled and taken through all of the things we have discussed till now. And all he said was, oh, DG, I'm sorry. I didn't know this. I wouldn't have come fighting you. Maybe I should be an ambassador to the rest of my colleagues in my office for them to know that the allowances they are taking is not what is supposed to be. So this is just to let all of us know that what you put in is what you get. If the salary you are taking is that huge, your pension is likely to be huge. If you declare, if you go to an insurance office and you say that I'm insuring my Rolls Royce and this is it, and then you come and say that, oh, it wasn't Rolls Royce at the time, it was maybe Porsche Cayenne or the bigger one, they won't allow you to say that to them because this is what you insured. Or you can't say that I'm insuring Kia Picanto, but when the insurance is due, give me that one that commensurates with Benz. It doesn't work like that. So with our monthly pension league table, this is what it means. And you are seeing an increase there because annually we increase pensions. You will get pensioners, existing pensioners, working to us and always asking, when is the indexation coming? Because they have the hope that Senate will obviously increase their pensions. So between December 2024 to January 2025, there has been an increase of 8.04% of the highest pensioner under the old law 247 PNDC law. The highest pensioner was getting 186 plus as of December 2024 monthly. It's a monthly pension we are talking about, yes. And then as at now, January 2025 till date, it has increased to 201 plus. The same will work for the lowest pensioner. So in December 2024, he was getting 409. And from January this year till we speak, there has been an increase of 25.74% because he's receiving 514.41. That figure, when you mentioned, people are screaming, but that is it. In the old law, there wasn't a cap to which you can pay your contribution. So people were paying huge and fat salaries to themselves. But in the new law, Act 760, there's a cap. You cannot pay more than 7,200 equivalent on a pension. So what it means is that that's why you are seeing the difference from the old one to the new one. And even under the new law, the highest pensioner as we speak is getting 28,000 monthly. This person was receiving 26,000 plus as at December 2024. And then the lowered paid pensioner on our payroll is also getting 514. He used to have 409. So if you hear people saying that, but I've worked over 30 to 40 years and SNIT only gave me 300 cedis, you will have to question why the 300 cedis. Because most of these people, when we even put their data together, the salaries they were even earning will not even put them on 300 cedis monthly. But the scheme is so generous that we do not want to underpay people. So the 300 cedis, if you hear somebody saying is the minimum pension we pay to a new pensioner, someone who has never received pension and is now on our payroll, that's where you hear the 300 cedis. So I explained something earlier. I said that if you are not able to make up to the 180 months of contribution, however, you are more than 55 years, and you are obviously certain that you do not have any income generating activity to contribute from, we cannot take your money. So SNIT will just lump all the money you have with us plus interest and give it to you as one-time payment. And that's what we call the old age lump sum. So in this case, you will not have monthly pensions because you contributed less than 15 years. However, you want your contributions. So we add interest and then we pay you. Survivor's lump sum here is what I explained about. Please let's understand this, that as long as you go on pension at age 60, your own contributions will be spread over a period of 15 years. That will take you to the age of 75. SNIT will pay you your own contributions over a period of 15 years. And even after your 75th birthday, we'll still continue to pay you. Because it's a social insurance scheme, it's contract of generation. So I bring mine, you bring yours. When mine is done, someone else's I will enjoy in that order. So we will not say that because at 75, it's okay, go and find somewhere to sit. No, we pay you till your death. However, we call something the pensioner certificate renewal. So when you hit the age of 75, you would have to come to our office. If you cannot, a relation will have to give us details. We visit your home or wherever you are, and then we authenticate you to continue to pay you. But if you are not able to attain the age of 75 from your retirement and you die, that difference will be paid to your family members. So for example, you went to a retirement at age 60, and then just 5 years after retirement, you passed on at age 65. However, we're expecting that you would have lived till 75. So it means that there's a 10 years difference of what we call the unexpired pension with us. That is why even at retirement, you still have to update your nominees or beneficiaries so that when you die between the retirement space, we can pay the monies to these people. SNAIT never takes anyone's contributions. And if you like, you can die today and see your family members will come and take their money. Because people say that, oh, are you sure when I die? I'm like, you die and see. They will come and show us evidence of your death, and then the monies will be given to them. So the invalidity, as I said, it sounds good, even though it's a contingency. It sounds good for some people, actually. It's that simple to assess this, because as long as you have paid 12 months of contribution in the last 3 years prior to your incident or prior to your sickness, SNAIT is ever ready to take you through the medical assessment procedure so that you can be put on pension, just like the old man or woman who has gone through retirement. So our stats is here. The youngest invalid pensioner on our payroll is a 31-year-old. Okay, he's been on our payroll since 2023, and we have paid him for the past 32 months. So because sickness, accidents, invalidity is not age bound, it can happen to anyone. We don't tag this to age. We can't say that, why did you fall sick before 60 years? It's not done. So we have a youngest pensioner who is an invalid one, of course. And this is the amount we are paying him on a monthly basis, because the salaries declared to us obviously was that huge. That's how come he's getting this on a monthly basis. And the lowest invalid pensioner, a 34-year-old, has been on our payroll since 1991. The 300 cedis is not in relation to this man being with us since 1991, but I'm just giving you an example that we have one on our payroll like that since 1991. The person has been invalid, and he's actually living long, and we are paying the monies too. So this is the immigration benefits I spoke about. If you come and work with us and you are not a Ghanaian national, we just say bye-bye to you, and then that is it. The only thing you have to prove to us is a letter that shows that you are permanently relocating from Ghana. And then the embassy of your country will attest to the fact that you were a foreign national, you came here to work, and then we pay you your monies, and then that will be it. Past credit here is simple. I will not take too much of time to go through the slide. But you see, before the introduction of the Act 766 in 2010, SNAIT was operating with what we call the PNDC Law 247. During that time, SNAIT was responsible for collecting both Tier 1 and Tier 2. And it was just a 13.5% for both 1 and 2. That was it. Now, the new law says that SNAIT should take, it was rather 17.5, sorry. SNAIT should take 13.5 in this new law, and then 5% is given to second-tier fund manager. We had people who were contributing under that old law before the new one was passed in 2010. So the question is, where is that 4% difference? Because if you are taking 13.5 now, you used to take 17.5. You have 4% with you, with SNIT, with you have my 4%. You change, the laws were changed and you are now managing 13. So where is that 4% going to? It is still with SNIT. So such people who will join the scheme before that new law was passed, if you go online and you view your statement right now, or you print your statement, down there you have something called past credit. If you go on retirement today, that past credit will be given to you as a lump sum. That is not your second-tier lump sum. It's just a lump sum because we are not managing it like we used to do in the old law. So we will tell you that if you are to retire today, that past credit will be given to you as a lump sum, all right. You take your monthly pensions from us, and then you will take your tier 2 lump sum from your fund managers. That is what the past credit is all about. So I'll end my presentation here and say that past credit is not for every SNIT contributor. It's for a category of people who were with the scheme before the new law was passed. I'll pause here for questions or any concerns. Thank you.
Thank you, Madam Jemima. That was very insightful. Please don't go too far. We've got some questions for you. Yes, so we'll delve right into the questions. But before that, please, you're encouraged, keep bringing the questions. And also, please share the link. Invite a friend, tell somebody, a colleague, someone who is preparing to go on retirement, that they should join this educative program. So, Madam Jemima, we'll delve right into the questions. We have quite a number here for you. So the first one, someone is asking, why are retirees under the cap higher sums and monthly pensions than those under SNITs?
Okay, when it comes to cap 30, I have little to say because with cap 30, it's not a contributory scheme. What I know is that those under cap 30, based on the kind of work they were doing in the past, automatically puts them under a certain fund. So when the increments can be cut across to everybody. But SNIT scheme is such that you contribute a percentage and then you will benefit from it when the time is due. What you don't put in, you don't get. So let's not even compare cap 30 to SNIT at all, because then the difference is very clear. SNIT is a contributory scheme, whereas cap 30 is not. That's what I can say.
Okay, thank you. So there's no comparison there. The next question said, the 13%, is it from the employer's revenue, though based on the employee's basic salary, or is it calculated on the employee's basic salary and same is deducted from the basic salary?
Okay, let me make it simple. The 13% will be from the employer's revenue, all right, but based on the employee's basic salary. So if the employee's basic salary is 13,000, employer is supposed to take 13% from his own revenue, equivalent to the 13,000 salary of the employee. And that the same will work for the employee's 5.5% as well. So every take-home salary of the person, you match it with the percentage. So the employer, and in this case, actually remits the higher portion of the SNIT contributor.
Okay, thank you. So the next question, when a person takes an early retirement and receives a reduced pension, will the person receive full pension upon reaching the retirement age or continue to receive the reduced pension?
Once you come and we process you on reduced pension, then reduced pension it is. You couldn't wait till your 60th birthday. I mean, there are lots of reasons why people will even want to take reduced pension in the first place. So if we put you on reduced pension, you have gone on retirement. So retirement packages, we cannot go back and say that, okay, now I am 60, so put me back. If you start earning the pension on a reduced pension, it's because you couldn't wait till 60 years. And that's how much you are taking till the following year when SNITS indexes or increases pensions for everybody across board. So the fact that you went to a reduced pension does not mean that when we index pensions for every pensioner, you will not know. Everybody has an increment of pensions at the beginning of every year.
Okay, thank you. The next question, we still got a bit more. Is the 13-digit SNIT number same as your Ghana card number?
Yes and no. So the 13-digit number, if you have your SNIT number or card, you can quickly pick and then I'll throw more light on something. If you pick your SNIT card or number, you realize that your date of birth is embedded in the number. So for example, C01860408. C01 is the code for Accra. So you registered or you were given birth to in Accra. You have 84. 84 will be that you were born in 1984. 06 is the month of June. 04 is the 4th day of June. And then we add the digits to it. That will be your 13-digit number. However, because of the SNITS NI number measure, everybody has a unique Ghana card number. We have just merged these two information. That's all about it. So we will just take you through the biometric registration for you to get your 13-digit number all right. It does not mean that when you have Ghana card, you cannot be enrolled on the biometric. It's just the digitalization of both platforms. So please, if you do not have a biometric number from SNIT, come, let's do it. And then after that, we can merge your Ghana card number with it for you.
Okay, the next question. Some years ago, SNIT was paying both the lump sum and the monthly payments. Now, Tier 2 is doing the lump sum. How has this impacted the monthly contribution by SNIT?
It is two different fund managers. The impact has been the same. When we're paying both lump sum and monthly pensions, we give every pensioner or retiree their lump sum one time, and that was it. And we'll still continue to pay you your monthly pension. It hasn't changed. The difference is that SNIT does not have the mandate to give you a lump sum anymore. So lump sum has been given to a different entity. They'll also pay you one time and they are done with you. And then SNIT will pay your monthly pensions. That's the difference.
Okay, thank you. Please keep the questions coming. We are here for you. We are here to answer everything. So, Madam Jemima, the next one says, could SNIT explain, or could you explain the provisions in the law that requires that provision is made for members of some persons and circumstances, such as schooling children who may not have been nominated as beneficiaries?
Okay, very simple. If I had touched on this, maybe we wouldn't finish. So it's good it's coming as a question. Automatically, the law covers or protects children in Ghana, and particularly minors. So the Act 560, which is the Children's Act, gives preeminence to everything SNIT law, such that if you are a SNIT contributor, a member or a pensioner, and you forget or you intentionally leave out a minor child, upon your death, SNIT automatically brings in that child to benefit from your SNIT contributions. And that child is entitled to 60% of your contributions. So whether that child is within your marriage or out of your marriage, which most of the men do not want to hear, then you are in for trouble for your family members, because the law is not explicit on whether it has to be a child out of wedlock or in marriage. It says, as long as we investigate and find out that that child belongs to Mr. A or B, rightfully, the law will take care of that child with a 60% out of your 100% contribution. After that child is catered for, then SNIT will now share the 40% for whoever you nominated.
Very good to know. Okay. So someone wants you to throw more light on the past credits.
Okay. So as I said, before 2010, we were operating with the PNDC law 247. That's the old law. So people who had joined the scheme before 2010 were obviously contributing to SNIT, where SNIT was handling both tier 1 and tier 2. It was as one contribution. So every worker was contributing a 17.5% of their earnings or salaries to SNIT. And then once you go on retirement, SNIT splits the money. A portion of it will be lump sum, a portion of it will be monthly pension. Then in 2008, a new law was passed called the Act 766. However, it was promulgated in 2010. So you realize that for me, who started work in 2012, as for example, I do not have any business to do with the old law because I started contributing from 766 era. But there are some people whose contributions were still with SNIT, as at the time SNIT was taking both tier 1 and 2 at the 17.5% rate. If the law has been changed and the law says that SNIT, you do not have the mandate to take any tier 1 and tier 2 together. You only take tier 1, and the tier 1 is just 13.5. Meaning I have somebody up there before 2010 whose 4% is still with SNIT, because now SNIT is 13.5. However, somebody pays 17.5. So let's say if the person started contributing from 1998 up to 2010, every year we pick excesses of the 4% from each contribution, and then we have lumped it together for that person. If the person is to go on retirement today, we had an interest, the Treasury Bill rate compounded what the country has declared as interest rates for all financial transactions. We add interest to it from all your excesses. It's an excess because it's your own money. That's what I said, that if you print your statement or you view your statement and you don't see past credits, it means that you are not part of that. But if you see past credits, it's an excitement because you know that after SNIT paying your monthly pensions and you taking the tier 2 from your fund manager, SNIT actually has a certain lump sum also to give you because you fall under that past credit that has been lumped over the years to you. So that's what the past credits means.
Okay, thank you. So let's go on to the next. Someone is asking, can I top up my SNIT's contributions myself to get a better pension?
No, please, you cannot top up. If you top up, what it means is that you are buying your pension from us, but we don't sell pensions, we earn it. If you earn it, it means that you have declared a salary and contributions are paid on behalf of you or your own self. So top up is not allowed. But let me clarify this. People are SNIT contributors, all right, but they have their own businesses and have registered it. Okay, so such a person is an employee for XYZ establishment. However, he or she is his own boss under ABC Penny. So he's an employer there and an employee there. The SNIT law allows multiple sources of income. And so your contribution there will come from ABC because it belongs to you and you have registered it. And then you working for XYZ establishment because you're an employee. Such person will obviously get a bigger and a fatter pension than me, who is working for only SNIT.
Okay, so we earn pensions. Okay. The next one, what is the maximum basic salary, that's insurable earnings, upon which the SSF should be calculated? Is it still the 52,000 Ghana cedis?
It's no more 52, it's now 63. For the year 2025, it's 63. So every year there is a maximum insurable earning. You cannot go beyond that, which is why you find out that under the Act 766, it sounds as though under 247, sorry, it looks as though those pensions, they are huge, are bigger. Those era, there wasn't a cap which you can. So as at 2025, maximum insurable earning is 63,000.
Okay, Madam Jemima. So we'll let you take your seat for now. Definitely there'll be more questions, but thank you so much for the insightful presentation. Shall we please give it up for her again? Okay, so going on to our next presentation, we have the head of corporate client relationships here, Axis, presenting on accessing your tier 2 and tier 3 pensions benefit. So please let's welcome Mr. Isaac Oparinoy.
Thank you very much, Ekwa, and thank you so much for joining us this morning. It's always a joy to interact with you and to also congratulate you on your upcoming retirement, even if it's coming up in the next 10 years. I'm going to briefly take you through how you'll assess your benefits under the Tier 2 and Tier 3 scheme, and also share a few information concerning that. Now, before we begin with the presentation, in the pensions arrangement, there are two types of pensions. Cindy has already spoken about the first one, which is defined benefit scheme. Under the tier 2 and tier 3, we work with a system which is called defined contributions. And so Snit was giving us the various parameters under which we can know how much we will receive our retirement. When it comes to tier 2 and tier 3, the parameters are simple, and that's why it's called defined contribution. And as net, you can actually predict how much you will receive, but under tier 2 and tier 3, that depends on how much you're contributing, the investment performance, among other things. And so at the defined contribution system, or under that system, it is your contribution plus interest. So assuming during your lifetime as a worker, you contributed to a tier 2 or tier 3 scheme for, say, only 1 month, and the contribution was, say, 1,000 Ghana cedis. And at retirement, or whenever you qualify based on the rules, your 1,000 cedis has accrued an additional interest of, say, 1,500. It means that if we add your contribution of 1,000 plus the interest of 1,500, your balance is 2,500, and that is what is paid to you. There are no formulas like the defined benefit system. It is straight away that will be paid to you, unless, of course, you want to put it into something like an Axis retirement income drawdown, and then we can talk about that. But you get to know more information. Please, we can move on with the slides. Oh, sorry. Thank you. Okay, sure. So we'll talk briefly about assessing your benefits, how you can check your statement, and a few things we think you should take note of before you move on. We've already been told of the 3-tier system where SNIT manages tier 1, corporate trustees like Axis Pension Trust manages tier 2 and tier 3. Now, we've also learned that the tier 2 is 5% of our basic salary, and that is contributed on behalf of we, the members, and it is vested with us. What it means is that immediately the contribution hits, it is yours. There's also the tier 3 scheme, which is voluntary. And so if you are fortunate to work with an organization that has a tier 3 provident fund, then you will receive benefits under that when you retire, or as the scheme's rule apply. The good thing also is that there is a personal pension scheme that is for you and I. Whether your employer is doing a provident fund for you or not, you can take advantage of that. And so no matter how many years you have to retire before you retire, you can reach out to us and we'll direct you as to how you can take advantage of the 3-tier, specifically the personal pension plan. Under the tier 2, I gave that opener where I mentioned that you can take a lump sum. So your benefits will be paid to you as a lump sum. If you're able to check your statement today and you see that your balance is 2,500, for example, that amount is what will be paid to you if you were withdrawing the money today. Now, there's an alternative where you say that instead of taking the money and then the money will tell me how to use it, or people will start inviting me to functions and making me a opinion and all of that. So that, and I know myself that maybe I'm generous or I'm tempted to be generous. I want to keep the money with you continue investing it, and every month or for certain periods, give me an amount out of that money. That is very possible. We will talk about that in details later during the program. Under the tier 3 also, you can take a lump sum as well, and then when you are retiring, you can take your lump sum when you're as an exit package. You can also make in-service redemptions under your tier 3, but please let me clarify that this depends on your scheme rules. In certain organizations, you don't touch your tier 3 until you're leaving the organization. Of course, others may allow. So it depending on the objectives of of setting up the fund, which then informs the rules. So depending on that, you may or may not be able to withdraw. Now, qualifications for withdrawing under tier 2. The first one is official retirement, just like SNIT, at the age of 60 or 55. So if you're 55 and you feel you want to go on voluntary retirement, you can apply for your tier 2 and receive that as your benefit. The second is benefits for immigrants or people that are non-Ghanaians. You're going back to your home country, you can receive or you can access your tier 2 benefits. Let me clarify that this applies to non-Ghanaians only. So you're in Ghana, you have a work permit which allows you to work as a foreigner, and you want to return to your home country permanently, you can take your tier 2, whether you're 60 or 40, whatever age it is, as long as the condition is that you are returning to your home country permanently, you can take your tier 2. In the case of medical incapacitation, like SNIT earlier mentioned, you can also assess your tier 2 as well. The process is that for the medical incapacitation, a medical board must certify that indeed you are medically incapacitated, and not that your laziness has come and so you don't want to work again. No. So they want to be very sure. Because of that, you have to appear before a medical board. And I think that one of the finest is SNIT. And so it is very easy if your application has been approved by the SNIT board. MPRA will approve it easily because they have the comfort of the SNIT medical board. So once you have that, please share that with us. We'll forward it to MPRA. And once we get the approval, be sure that we will pay you. The next is death benefits, where nobody likes to hear about it, but it is bound to happen. And so when the time comes and God says that come home for, you are being substituted for somebody else to come, the people you leave behind will give the money to them so that they can also bless you whilst you are in your grave, resting, whatever the case may be. The fifth one applies to, the fifth one is unemployment benefit. And I want to clarify that it's only applicable to tier 2. The law says that if you are 50 years, between 50 and 54, and you're unemployed for the past 6 months and you can prove it, you can submit a request to the Labor Department, who will review your request and forward it to the NPRA. NPRA will also review it and give approval or otherwise. If the approval is given, the corporate trustee will be instructed with an NPRA letter, and on that basis, we can pay you your unemployed benefit between the age of 50 and 54. That applies to tier 2. It doesn't apply to SNIT. Please, let's take note of that. Tier 2 does not have in-service withdrawal. A finance director for one big organization called me and said he wants to take just a small part of the tier 2 to complete his building project. He will bring it back. He said he promised. No matter how much the promise is, unfortunately, you cannot take your tier 2 apart from the conditions we've listed above, the official retirement, or whether voluntary or compulsory, benefit for immigrants, medical incapacitation, death benefits, and then unemployment. You cannot take your funds aside that. For tier 3, if you are withdrawing and you've not contributed for 10 years, so let's say your scheme rule allow you to withdraw, that's okay. But if you've not contributed for 10 years, I beg your pardon, if you've not contributed for 10 years, you pay a tax of 15%, 15%. Please, let's take note of that. However, if you've contributed even for 1 year, 1 month, and you are retiring on the basis of retirement, medical incapacitation, death benefit, unemployment benefit, there's no tax because you are retiring. And please, let's take note of that. I'll move on and look at how we can assess our benefits. Now, on this call, there are two categories of scheme members. Some of us are part of what we call employer-sponsored scheme. It means that your scheme is just for your organization, or maybe your organization and some related institutions. There's also the other one, which is called master trust schemes. So one of the ways you can know is that if the name of the scheme is Cedar Pension Scheme, Cedar Provident Fund, Secure Pensions Occupational Master Trust, or Secure Pensions Provident Fund, it is a master trust scheme. If you don't see that, then it's likely an employer-sponsored scheme. That's very important because it affects the timelines. Either ways, you're supposed to pick a withdrawal form from your HR or accounts officer. If you can also pick same from our online portals, but it will still have to go back to the HR and accounts officer, especially for tier 3. Once you complete the form, please add a copy of your Ghana card and send that to us. It can be through an email, through your employer rep. Some people would like to visit the office. In these days of technology, we don't want to burden you to drive all the way or pick series of cars just to deliver a form. You can send it to us via your HR, which is the easiest and the most convenient. If you want to email it to us, that is also okay. Once we receive your form, if it is a master trust scheme, then in a maximum of 5 working days, the funds will be paid to you. If it is a standalone or an employer-sponsored scheme, that takes 30 working days, a maximum of 30 working days. The withdrawal or the amount will be processed and paid to your bank account. We will pay to a bank account that bears your name. It can be a joint account with your wife or your husband, that is okay, but we cannot pay to a third party unless the conditions are extremely beyond everyone's control. In that case, we'll review and let you know, but strictly we pay to accounts that bears your name. Please, let's take notes of that. As we leave here, one of the things I want you to do is to check your balance, because if you know your balance, then you will begin to plan your life according to it. My colleague was sharing with me that at retirement, people get a lot of business ideas, and it's a very risky time because at that point, you don't have a lot of cash flow. That means that whatever little you have, of course, 20,000 may be little to somebody, 200,000 may also be little to somebody. So whatever you have to think about the fact that your retirement, especially if you don't have another job or any source of income, let's manage that well. So know your balance, then you can plan your life accordingly. You can know your balance by dialing star 1860 hash. We like that number a lot because you don't need internet with any phone. As long as it has MTN or Telecel on it, you dial star 1860. 18 because at the age of 18, you become an adult. 60 because that is the retirement age. So star 1860 hash, you can check your balance. You can use your SNIT number or your member number to check your balance. You can visit our web portal and check your balance as well. That one, a computer is most ideal, but you can also check that on a mobile phone. Talking about mobile phone, you can also download our mobile app. It's available on the Android platform and then the iOS platform. We can download and check it that. Aside all of these, your employer rep can also assist you to get a statement. Beyond that, if you call our call center or visit our website and you're chatting with us, we can also share a statement with you. So you have no excuse not to check your statement. There's so many avenues, and we encourage you to check. As you're even near retirement, it will be a good time to audit your statement, go through it, and see if there are any gaps or lapses. Then you can inform the appropriate quarters, and that can be addressed for you. We encourage you to do that. The final words I'll share with you. The first one is that obtain relevant information regarding your scheme, because we are close to retirement. So whatever scheme it is, get to know as much as you can know about it, including the corporate trustee, including whoever the service providers may be, but most importantly, the administrator or the corporate trustee. Secondly, we want to encourage you to port all your funds to your most recent scheme. The thing about SNIT is that it's one institution. So anytime you change job, it will still be SNIT managing. But when it comes to tier 2, the service providers are a lot, more than 20. What it means is I may be working with Axis, but 3 years ago, 2 years ago, I was working with another company whose tier 2 may not be with Axis. Fortunately, the law says that you can move the tier 2 with you as you change jobs. So if at this time on this call, when you are very close to retirement and you have not made that step, it's a good time to initiate the process. It's very simple. You need to identify the corporate trustee who was managing the funds before or wherever you were working before you joined your current employer. If you are not sure, we can assist with that. But once you get that information, share your name through your HR rep or any of our online platforms. Once we get your name, your email address, and your phone number, we will give you the appropriate forms to complete. We get a copy of your Ghana card, and we will follow through to get you the funds. By MPRE regulations, it should take about 90 days, but we will follow up. We have a dedicated team who will be following up to make sure that your funds are in, and then when it comes, we will also update you. It will show on your statement. We also want to encourage you to update your beneficiary records. It's one of the painful things that happens when somebody fails to complete a beneficiary form. Will be forced to use the PNDC law 101, but maybe that was not your wish. So we kindly encourage you to complete a beneficiary form. For some of you, you can do it online. For others, you can complete it with your HR or your employer rep. So either ways, visit your employer rep or any of our data platforms and update your beneficiaries. And the last one, I mentioned that earlier, know your goals and then apply your benefit accordingly, so that if your tier 3 or your pensions benefit can build a school, you build a school. If you can build a provision store, then you build that accordingly. On that note, I'd like to say thank you and hang around for your questions so that we can clarify it. Once again, thank you for joining us.
Thank you very much, Isaac. Please keep the questions coming. We will take our last presentation, then take a Q&A or have a Q&A session. So we've heard about tier 1 SNIT, we've heard about tier 2 and tier 3. Now let's move on to health matters. So our next presentation, we have Dr. Caleb Junu. He's a senior resident in the geriatrics department, if I may say so, at the Kolebu Teaching Hospital. And he's going to present on healthy living in retirement, healthy living in retirement. Please welcome Dr. Caleb.
Thank you very much. And happy retirement for those going on retirement. Yeah, so I'm here to just give us a very short presentation on how we can prepare for retirement in the area of our health. When General Manager was speaking, he made mention of the fact that we don't have to approach retirement with fear, but with confidence. And that is what I seek to do this morning, to help us all to have a positive engagement as we approach our retirement. So this is just a very short outline we'll be going through. Yeah, so there is something interesting happening in the whole world. And that is the fact that the population of older adults increasing all over, especially in our part of the world, that's the sub-Saharan Africa. There are lots of reasons to this. Medicine expertise is increased. We have public health also generally better. So diseases that tend to kill people in the past, these days we have antibiotics and all that. So all these have really contributed to the fact that we have people living longer. But the question is, we don't just want to live long in terms of the numbers, but what is the quality of the extra life that we have? That is very important. So it's not just about the numbers. So for all of us, one of the things that will inspire us is to have a picture of how we want our retirement to be like. So I'll show us a few pictures. Yes. So on my left, you can see older adults engaging in, so that looks like a puzzle game. This is a good retirement to have. So in retirement, you still have the soundness of mind to be able to deal with some puzzles, which is very good. The right aspect, you can see still older adults engaging in some fun at the beach. That is something we can inspire. On the left side, you can see boys going on jogging, which is also very good. Remember, we don't want to put fear into you, but we want to inspire all of us to have a meaningful retirement. So at the age of retirement, we still want to be able to do these. And you see the girls also having their own, I'm sure they are gisting. And how beautiful and fulfillment you have when you can have fun with your grandchildren. In the right aspect, you can see the older adults in meaningful relationship with their loved ones. So what we are saying is that all these things is possible, and that is what we want to encourage all of us to aspire towards. So with this in mind, we want to appreciate some concepts of aging. The WHO and all health organizations have signed up to what we call a healthy aging, where we want to be able to maintain a functional ability and a well-being even in old age. So by this, we simply mean that you should still be able to groom yourself, and then you should have that good physical, not just physical, but mental well-being, which is very important as you age. We don't want a situation whereby you can't even remember the name of your children. Nobody wants that. Now, to be able to achieve this, it's all about the choices we make as we move along. Very important. As we move along. So irrespective of your age now, the choices start now. So we don't want a situation where, okay, I'm now 60 years, so now let me take good care of myself. No, it should start way, way, way before. So this just shows us that generally, there's another important concept called successful aging. So as we age, generally, one of the things that happens is that our physiology decreases. So an 18-year-old is not like a 75-year-old. If you take even your skeletal system, the bones of the 75 is weaker compared to the 18. So you have to take care of yourself. Now, there comes a critical point where this physiology begins to decrease. And there are generally three trajectories. So the middle one, as you can see, is the normal one. That's the normal aging. Above that is what we call successful aging. So you see an 80-year-old who is still strong and doing very well. I have a patient who is 85 years, a lady, and when she comes, you will not know, you will not just believe that this is an 85-year-old lady, strong and engaging in all functional abilities, and that is what we all want to aspire to. And then we have the lower portion, the cognitive aging, where somehow the physiology declines such that you are not able to have that soundness of mind. The extreme is what we call dementia. To encourage all of us, we all want to aspire to have a successful aging. So let's keep that one in mind. So now, how can we achieve this? We've seen the beautiful pictures, and I'm sure you also have your own picture in mind that you are aspiring to. There are 4 key areas that we want to throw more light on. The first one has to do with our physical abilities. And this has to do with exercising, a very important one. As you grow, your muscle strength reduces. Exercise is one of the things that can tone your muscles, give strength to your muscles, and keep you fit. One of the things we want to guard against in old age is the issue of falls. We don't want anyone to fall. You can imagine if you fall and you even have a pelvic fracture, if God doesn't intervene within the next 6 months, you are likely to go and we say bye-bye to you. We don't want that. So exercise is very good. Just walking, cycling, but walking is good. If you still have the ability to walk, we encourage you to walk. Get a very good environment. And I'm particular about that. These days, we have this Okada moving left, right, and we don't want anyone to be hit by a motorcycle. So get a very safe environment where you can do at least 150 minutes per week for most parts of the day. So we encourage you to do it, if not every day. So most parts, so if there are 7 days in a week, so like 4 days onwards, you should be able to at least do some good walks, sweat a little, let your heart beat a little, and that will be good. At least if you're able to do 20 minutes to 30 minutes, that is very good. The issue of diet is also very important. Generally, we know there are people with idiosyncrasies and the rest, but what we encourage is that you can go to your primary caregiver, sit with your dietitian, and then they'll help you to plan based on your activities, the energy you require, and also based on your favorite foods and the staple foods around will help you to plan your meal very well. But generally, we encourage you to increase your fruits and vegetables and also reduce fatty meals. Chicken skin, for that, we would even say is outright no. Outright no. And we have a very important point that you should also engage in regular health checkups. In fact, one of the things we encourage is that the moment you hit retirement, you should go for a general medical checkup. Just present yourself to your doctor, to your health worker, that I'm on retirement, I've come, check me up. This is very important because for a lot of diseases and a lot of health conditions, if we're able to catch them early, we're able to do a lot about it to avert it from becoming worse. Guess, and the interesting thing that at that age, that is when a lot of diseases begin to show up. Cardiovascular diseases, diabetes, hypertension, cholesterol problems, bone problems, my waist, my knee, back pain, they begin to show up. The issue of depression, anxiety begin to show up, loneliness, and loneliness really tips a lot of people into depression. The other things are the issue of the cancers. And for most of the cancers, if you're able to get it early, we are able to virtually cure it. So we encourage you retirees to go for a medical checkup once and regularly. But the very first one, as one of your retirement gift to yourself, do a medical checkup. The other one has to do with your mental well-being. At that age group, one of the challenges people face has to do with what we call cognitive impairment. The extreme end is full-blown dementia, where the brain function is just that bad in a layman's term. One of the things that can keep your brain active is a lifelong learning. So there's nothing like a finished school in retirement. Once you have the ability to read, that is when to even read more. Online courses. I visited an adult home quite recently, and I was amazed. I always share this example when I get the opportunity about this elderly man who had a lot of books at his bedside in the adult home. An avid reader. I said, wow, that is very good. So that's one of the things we should do. keep your mind active, keep learning new skills. The issue of stress management is very important. Know your stresses and don't allow anyone to stress you. Like was said, once you go on retirement and people say that you have a lump sum, they'll start inviting you for programs. Come and be the chairperson here. It was your penny here, here and there. Don't allow anyone to stress you at all. You need to keep your mental well-being. It's very, very important. Another important one is the sleep. Sleep. So at the clinic, we'll have a lot of older people come to tell you, I can't sleep, I can't sleep. Just see your health worker. There are ways that we can help you to have good sleep. It's very important. That is when your whole body and brain begins to regenerate. And the other thing you need to do is what we call the social connections. It's very important. You don't have to be anti-so. Avoid loneliness in old age. Family, friends, join clubs. These days, I think it's easier because of groups, WhatsApp groups that we have. So you can have your own retirement groups, video calls, all these things. Just stay connected. Don't isolate yourself. And I gave an example of whatever you do or whatever you are doing in your active time, continue to do it. But this time, it should be by way of impacting into the lower generation. And that's one of the easiest things to do. So if you happen to be a chef, what can you do? You can gather people around. These days, people are interested in cooking. Gather them around, or there can be a cooking competition. Be one of the judges. And so just imagine if you're a chef having classes, it will keep you active. Probably you walk to wherever the classes is, you'll be active. You'll be engaging with the students. That's social engagement and connection, keeping your brain active. So just keep active. Whatever you are doing, retirement is a time to also impart to the lower generation. And the financial part, a lot, this is where as this pension comes in. So I'm sure a lot will have a lot to say about this. Plan, plan, plan. And I'll leave that. But whatever it is, I'm stressing that no one should stress you at that time. Have your budget and try to stay within your budget. So as we come to the end of this short presentation, we want to say that it is possible to have a fulfilling retirement. It's possible to age successfully. Let's be counted amongst the percentage that will age successfully. And that is what we aspire all of us to get to. So don't forget your physical health, mental well-being, social connections, very important, and your financial wellness, very important. So the assignment for all of us is to decide on at least one good habit you can do consistently. Consistently. Maybe you can decide to take some walks around, decide to read a book a month or two, and the time to do it is now. So we wish all of us a successful aging as we enjoy our retirement. Thank you very much.
Thank you very much, Dr. Caleb. Thank you so much. So let's take some few more questions before we have our panel discussion. So, Mr. Oparinoi, yes, please, you are being summoned. So we've got some questions here. Someone wants to know what happens to my tier 2 and 3 when I leave my current company. Can I use my tier 2 or 3 as a okay, so let's take the first one. What happens if the contributor leaves the current company?
Sure. So by law, your contributions will stay invested. What it means is that even if you have a balance of 100 Ghana cedis, that will stay invested and will be growing together with the current contributors who are also contributing. until you put in a request to transfer. Now, we encourage that you transfer because at a point, if it has not been assessed for a very, very, very long time, sometimes you may not even remember where it is. Maybe there can be a merger or that company has gone down. MPRA can get you all that information, but the process might be cumbersome. So to save yourself all that stress, please initiate the transfer process. But be rest assured that once you leave, it continue growing or investing with that of current contributors, except that you don't have new contributions coming in, but whatever you have is being invested.
Thank you. So the next question. Please, can I use my tier 2 or 3 as a collateral for a loan facility?
Okay, for tier 2, the answer is no, you cannot use that. Tier 3 is possible, meaning that if the scheme rules permit you, then yes, you can use your tier 3 as a collateral. So your scheme rule, which mostly will be by the employer and sometimes union reps. So if the employer allows it or the scheme allows it, then yes. So for example, the Access Pension Plan, which some of you are members of, if you want to take a loan, you can use that. In fact, on the Access Marketplace, there are some financial institutions that are offering loans that you can access, and then once you qualify, they will give you a loan. Thank you.
Thank you, Opari. We've got another one here. If the delays in submitting the withdrawal document to Access, what options are there for the person?
Okay, this is an interesting one. So for tier 2, if you experience such delays, please, you can reach out to us with your form and Ghana card. We'll take it up from there. Tier 3 is extremely difficult, but we can still, this is not a promise, but we'll engage with the employer to find out what the problem is. And sometimes it may be just a clarification that the employer needs, which we can assist with. So you can give us a call and then we would do our possible best in what we can do to help with the situation. Thank you.
Thank you very much, Opari. Please, you can have your seat for now. Dr. Caleb, please, there are some questions here for you. Okay, so a participant wants to know, what are some of the common sicknesses people struggle with at retirement, and how can these be avoided?
Thank you very much. So, like I mentioned early on, one of the conditions we face during retirement has to do with cardiovascular diseases. They are in a very large percentage. So by that, I mean hypertension, diabetes, cholesterol problems. And if this is not managed well, it can lead to strokes and other related conditions, heart attack and all that, kidney problems. So those are there. The other group has to do with bone problems, osteoarthritis, degenerative bone diseases, and the rest. Another group had to do with the mental health, which is very important. And a lot of time we tend to relegate that to the background. So mental health issues, depression, anxiety, and then the cancer. So these are conditions that we face or people face during retirement. To be able to avoid these, like I said early on, you don't have to wait till retirement before you decide to start taking care of yourself. It has to start ASAP. Diet issues we mentioned, exercise. In fact, if you're able to take care of yourselves in terms of diet and exercise, this alone puts you at the top few with the successful aging we're talking about. The other aspect has to do with the lifestyle changing. Smoking, alcohol, avoiding these things also puts you in the bracket of those with very good health. I think this will suffice. For the specifics, always go to the hospital, be in touch with your health care giver, which is very important, and then they can help you to be able to sort out the very specifics. Thank you.
Thank you, Doc. We've got more here for you. So someone is asking, why is healthcare cost becoming a major concern for the average Ghanaian? And are health facilities doing anything to address this? 2 in 1.
Yeah, this is a very interesting one. Healthcare financing is always a problem, not just in the retirement bracket, but even before retirement. A lot of payments is from pockets, out of pocket payments. And just imagine when at the retirement, you are not actively working, you have to depend on your retirement allowance. Then, interestingly, that is the age bracket, you still have diseases popping up. How do you fund your medications? I buy medications for my parents, so I know, and it's not easy. People come to the consulting room complaining every day. But I think one of the things we can do is to start way back. These days, there are a lot of packages around where you can save towards your retirement, like Aziz does, and that helps you to be prepared financially. The National Health Insurance Scheme is there, and then there are other private health schemes which are also there to help you. So I think it's about planning and see how to, for the health facilities, one of the things we can do is to make our hospitals older adult friendly, so that if you move from your house to the hospital, we tend to give you some priorities, but the environment itself should be such that we should have the rails where you can hold. You don't have a lot of stairs for you to climb, and all these petty things can be put in place to make sure that the hospital is older adult friendly. Thank you.
Thank you, Doc. So let me take the last question for you, that you can have your seat. So from your experience as a doctor, how do some of your patients manage to comfortably cover their health bills? So this is tied in to the previous question.
Yes. So it's about savings towards your health and trying to maintain good health. That is number one, so that you don't end up spending so much on your health in the first place. The other aspect has to do with having the health funds that we talked about. There are various ones, and there are very few retirees. I have few clients in the hospital. They come and they no stress. Doctor, write the prescription for me. My former company is prepared to pay. So those few options are there. But for everybody, the minimum you can do for yourself is to sign up to the National Health Insurance Scheme. And with that, you should be good to go. Thank you.
Thank you very much indeed, Doc. So we have more questions, but please, you can take your seat. We have more questions. Please keep them coming. Mr. Noy, Mr. Paranoy, we have some tier 2 and 3 questions here for you.
Or you see an alert, it has your employer's name. It's likely to be an employer-sponsored scheme. That will take a minimum of 30 working days to pay. Now, please bear in mind, because if you are retiring, say in October, for example, say today is your last working day and you are retiring, your employer will pay your tier 2 contributions in November, because the law says it must be paid on the 14th. Then by November, when we receive it, some plus or minus 20 days, 30 days, then you receive the money. So you can work with 30 working days. If it is a master trust, similarly, the tier 2 will be paid, the last tier 2 will be paid in the next month, which means that if you are retiring in October, your employer will pay in November. So once the employer has finished paying all the contributions, and we have also received your withdrawal, within 5 working days, you will receive the funds. So for those on the master trust schemes, it's 5 working days after we have received your withdrawal and all your contributions have been paid, just 5 working days. For those on the employer-sponsored scheme, after your payments have been made and your form has also been received within 30 working days, that will also be paid. Thank you.
Thank you. The next question. If I'm working with two companies at the same time and the pension providers are different, Axis and another say, how will I match the tier 2 and 3 to Axis?
Okay, if based on the question, if you are currently contributing to both of them because you work with two companies, then it's not possible to merge unless you can convince your employer to pay the other employer to pay the tier 2 contributions to Access, which will be happy to have you actually. But if they are there because the employer, you may not be the only employee, there may be other employees whose contributions are being paid to that corporate trustee. But if the employer will allow, then you can enroll with us as in the company and then receive your tier 2. That way you merge it. However, when you stop working with that employer, then you just tell us, we'll give you a form to complete. We take your Ghana card in addition to that, and then we will merge or transfer or port the previous contributions into your current employer's scheme. Thank you.
Thank you. The next, how can Axis help us know the employer reps for our various organizations?
Okay, I think it would be easier if you do it internally. So the best way to find out is to speak to the people that work on payroll or the accounts department or the HR department. In about 99% of the case, these are the people or the people who form the rep that communicates or deal with Access. The payroll team or the accounts team. In bigger organizations, it may be a big accounts team, but some people within the accounts team. Then HR people can also help. In some situations where the employer is not very big, maybe the CEO may also be doubling as the payroll officer. So in that case, you can speak to that person. So once you speak to any of these people, you are sure you will know who it is that works or deals with us as the representative of the company. Thank you.
Okay. The next question. I'm with a company for over a year now I'm with a company over a year now and our tier 2 is not being paid. I'm paraphrasing. What can be done to help?
Okay, please give us a call on our call center line. We will drop it in the chat box. Call us, we'll take your details, and then we'll take the necessary action and make sure that the payment is done. Yes, so just give us a call and we'll attend to this swiftly. Thank you.
Okay, thank you. On voluntary retirement, do you need approval from your employer before you can claim your tier 2?
Okay, you don't necessarily need an approval. However, we need to have evidence of your exit. So that can be a termination letter or your resignation letter. So let's say, and let's be reminded that you can go on voluntary retirement between the ages of 55 and above. So just the letter that you tendered in as your resignation, if it was termination, then you give us that. Now, in the case of a resignation, we must also receive the acknowledgement from your employer that indeed you have left the company. When you tendered in your resignation, the official response from your employer. If you don't have that, you can obtain that from the employer and then we can proceed. So not necessarily an approval, but an acknowledgement from your employer that they have received your resignation. If it's termination, then you also give us that termination document and you're good to go. Thank you.
Okay, thank you. So the last question for you before we move to Dr. Caleb again. So someone is asking, can you amend your beneficiaries on the Access portal without going through your employer?
Rightly so. You can amend your beneficiaries on, so amend means that you already have beneficiaries and you want to edit. Yes, you can do that. The requirement is that if, say, Ikwa is my first son, hypothetically, first daughter, sorry, apologies, first daughter, and then she's my beneficiary, but she's stubborn, so I'm going to add another person. Delete Ikwa, put the two people. So if Ekwa was there, that means Ekwa will be taking the entire 100%. Now you're going to add another person. The two together will have to add up to the 100%. So you delete the 100%, you give Ekwa the new percentage, and then you add the second person, and then you give that person the new percentage. You can do that on the portal. If you've never done it at all, you can also do that on the portal, and then it will be captured in our system. For a few companies, you have to go to your employer. And I'm sure we've had a lot of engagement, so they would also be aware of that. Thank you.
Thank you very much, Mr. Isaac Oparinoi. Now we've got some more questions for Dr. Caleb. Okay, Doc. So someone wants to know what supplements can be taken to promote good health in old age?
Yeah, thank you very much. This is a very controversial one. Yes, in terms of supplements, generally, once you are having good diet, you take your vegetables regularly, and you largely don't need a supplement. That is it. The other aspect too is when you see a healthcare professional who assesses you and there's a reason for you to take a supplement, then that is when you are allowed to freely take supplements. I know there are a lot of supplements in the market people take every now and then, but strictly speaking, all things being equal, you don't really need it. But once you are assessed by your healthcare professional and there's a specific reason, then we are comfortable to let you take supplements. So discuss it with your healthcare professional. Thank you.
Okay, Doc. The next question. What key medical screenings or preventive measures would you recommend for individuals in their late 50s and 60s?
Yeah, thank you very much. So in terms of screening, these should have started way even before your retirement. But at that stage, for the men, by now you should have done your prostate a number of times, breast exams, endometrial, cervical tests, all those things should have been done and followed up even at that stage. So these are some few and basic ones that should be done. And I'm still laying emphasis on the fact that ideally it should have been done way back before the retirement, and the retirement time will just be a follow-up to those screenings.
Okay, Doc. One more, actually two more. Aside walking, what types of physical activities are most beneficial and safe for older adults to maintain strength and mobility?
Yeah, thank you very much. Cycling, I mentioned, is very good. Swimming is very good, but there are a lot of people who don't do water at all in our part of the world, I understand. The other aspect of exercise is the gym. So you need a good combination of the aerobics and a good combination of the strengthening exercises. At that age bracket, you need to be supervised if you happen to go to the gym so that you don't end up breaking your back at the gym. So have a good combination, walking, cycling, and the like is very good for you. Hit the gym, do some strengthening exercises. Remember, I said at that stage, the muscle tone is reduced, muscle is weaker. You need to build a little muscle to be stronger. So in general, I'll say that combine both the aerobics and the strengthening under a very good supervision. Thank you.
Great. So the last question, please. Many older adults experience change in their sleep patterns. How can retirees improve their quality of sleep and ensure they get adequate rest?
Yeah, thank you very much. I see a lot of cases of sleep. And one of the things I've realized is that people don't have good sleep hygiene. So by sleep hygiene, I mean things that we should be able to do to enhance good quality sleep. These days of mobile phones. So people, should I call it addiction, are addicted to phones. So you tell yourself, I'm going to sleep. You are in bed, but still having the screen on. It's one of the things that I've realized that really, really distorts. You see, once you are going to sleep, the brain interprets it that, okay, work for the day is done, let's go and sleep. Then you go to the room with phone on, screen on, you disturb the brain becomes confused. Are we sleeping or we are working? The other has to do with uncontrolled medical conditions, which I also find very common. So you have one who is living with diabetes. The diabetes is not well controlled. And every now and then we'll have to wake up to use the washroom. So just imagine, by all means, your sleep will be disturbed. Prostate issues, every now and then you have to wake up to use the washroom. And for the ladies, they have weak pelvic floor, and that also disturbs them, the ability to hold urine. All these things disrupt their sleep. The other has to do with just as simple as the weather. Too cold, too warm. The environment is not conducive for sleep. If you can afford it, you can get an air conditioner and then get a temperature that suits you. And worst case scenario, there are few medications that we can use to help. Not all of them are good for the older adults. So those specific ones, see your healthcare professional based on your medical condition, based on other factors, they will help you to select the best that you can use. Thank you.
Thank you so much. So the next item on our agenda is the panel discussion. So it's still not too late to call a friend, send the link to a friend to join. We are going to have a very solid panel to help us discuss some real life matters. We'll just take a short break and regroup afterwards. Thank you.
There some financially vulnerable for years. The right. Between flexible payout options backed by expert guidance to secure financial. Income plan and enjoy the retirement you deserve. Call 03-0273-8555 to speak to a pension advisor today. Axis Pension Trust, your reliable partner in pensions. Did you know that over 70% of retirees exhaust their retirement benefits in 3 years? Without a solid plan in place, you risk depleting your savings prematurely, leaving you financially vulnerable in your later years. But your golden years can be better with the right plan. The Axis Retirement Income Plan is here to guide you towards financial security and peace of mind. Convert your lump sum benefits into guaranteed monthly income, tailored just for you. Choose between flexible payout options backed by expert guidance to secure your financial future, because your golden years should be full of peace, not worry. Add a golden glow to your golden years by enrolling on the Axis Retirement Income Plan and enjoy the retirement you deserve. Call 03-0273-8555 to speak to a pension advisor today. Axis Pension Trust, your reliable partner in pensions. Did you know that over 70% of retirees exhaust their retirement benefits in 3 years? Without a solid plan in place, you risk depleting your savings prematurely, leaving you financially vulnerable in your later years. But your golden years can be better with the right plan. The Axis Retirement Income Plan is here to guide you towards financial security and peace of mind. Convert your lump sum benefits into guaranteed monthly income, tailored just for you. Choose between flexible payout options backed by expert guidance to secure your financial future, because your golden years should be full of peace, not worry. Add a golden glow to your golden years by enrolling on the Axis Retirement Income Plan and enjoy the retirement you deserve. Call 03-0273-8555 to speak to a pension advisor today. Axis Pension Trust, your reliable partner in pensions. Did you know that over 70% of retirees exhaust their retirement benefits in 3 years? Without a solid plan in place, you risk depleting your savings prematurely, leaving you financially vulnerable in your later years. But your golden years can be better with the right plan. The Axis Retirement Income Plan is here to guide you towards financial security and peace of mind. Convert your lump sum benefits into guaranteed monthly income, tailored just for you. Choose between flexible payout options, backed by expert guidance to secure your financial future. Because your golden years should be full of peace, not worry. Add a golden glow to your golden years by enrolling on the Axis Retirement Income Plan and enjoy the retirement you deserve. Call 03-0273-8555 to speak to a pension advisor today. Axis Pension Trust, your reliable partner in pensions.
Back and thank you for staying tuned. So as you can see, we have a very solid panel here with in-house experts, and the most exciting being a real-life experts on the subject matter of retirement. So we'll just do a quick introduction of our panelists, then we get to know them. So on my extreme left, we have Madam Lucy Alando. She's a retired staff formerly of Stanbic Bank Ghana. Madam Lucy. And next we have Ms. Dinah Ayi. She's also with the corporate client relations here with us at Axis. Next, the only gentleman amongst us, we've got our investment strategist, Mr. Gideon Amweninche. And we have our chief legal officer right here in Axis in the person of Mrs. Louisa Siao. Shall we give them a round of applause? Okay, so let's delve right into the discussion, into the thick of it. So this discussion, the premise is we conducted a survey, a preparedness survey to evaluate the how prepared retirees are and to identify some prevalent challenges. So we are going to start with Madam Lucy. So Madam Lucy, according to this survey I mentioned, the top 3 challenges retirees are facing. First is low pensions, and that pulled in at 49%. Demands from society or family came in closely at 42%, and health challenges also followed with 37%. Amongst these 3, would you say that these are your observations as well? These challenges, are they your observations as well?
Okay, thank you. I would say that generally, if you are to look around at the pension population, you may be tempted to say that, yes, that is the observation. Low pensions, health, and then family demands. Yes, you'll be tempted to say that. But personally, I would say that personally, I would say that health issues come top to me because Doc mentioned health. In your retirement, if you don't have a healthy life and you are not very strong and sick, even your low pensions will do nothing to you. Family demands, they cannot help you. So I would put personally health as my number 1 priority. Then the pension, your pension income as second, and the demands from family. So generally, I agree with the survey, but I think that for myself personally, I'll prioritize health.
Okay, thank you, Madam Lucy. So just to follow up on that, How have you managed these challenges, especially with the health, as you've mentioned, is priority to you?
Okay. The way I manage these challenges were preparation. Before I went on retirement, I did some financial planning. So I knew at that time, I didn't realize I could go on the SNAID portal to be able to calculate an estimate of how much I'll be getting. So I did the estimate myself. I did a manual calculation. I also was receiving my tier 2 and tier 3 pensions. So I knew averagely what the balances were because of that. So I then planned in retirement, what should I do? So my financial planning was there. I looked at my budget, what I would like to spend on retirement. I looked at it and decided that personally, if I wanted to live comfortably, about 70 to 80% of what I earn now should be what I should be getting on retirement. So you calculate all and realize that if there's a shortfall, I must do some additional investments, savings, investing in, what do you call it? Some of these mutual funds and all were places I could put money in to give me additional streams of income when I go on retirement. So financial planning was key for me. I also realized that when you come on pension or you come on retirement, some of the expenses you need to cut away. So as part of my budget planning, I had my expected income, expected expenses to be able to live. Then I realized that Doc talked about medicals. Medicals, and I say it's very key because if you are sick, even the money cannot help you. So what I did was that when I was going on retirement, I did your pension fund. Yes, I did the pension fund. I told myself that I want to do my medical checkups twice a year. I want to be able to buy my medication. So remember that it's a lump sum, and you say, you can give me monthly or quarterly or whatever I want. I chose quarterly. I said I wanted a quarterly payment because I knew quarterly I'll be buying my medication, I'll be going to the hospital. So I prepared some money aside for my medicals because I said health is key to me. Then the next thing is, Doc talked about your health, living healthy. I also knew that this was important to me. So what did I do? Exercising. My diet changed completely because I was eating more fruits, more vegetables, less fats, and all the other things that go with health so that I can maintain a healthy lifestyle. Then I also knew I had to plan and not to come home and just sitting down and say, I'm retired, doing nothing. So I had to plan to be able to learn even new things. So for instance, after retirement, I took courses in AI, I took some other courses in corporate governance and all that, just to keep my mind active and make sure I lived a fulfilling retirement life.
Wow, thank you, Madam Lucy. You've really lived by the book, if I may say so. Yes, and just to chip in, Madam Lucy mentioned that she budgeted, she planned, and in-house we have a team of financial planners who can help you do same. Have drawbacks for your monthly or quarterly or whichever period you would want to choose when you go on retirement. So thank you so much, Madam Lucy. I'll come back to you shortly. Now, let's come to Dinah. Dinah, still from this survey, what are some of the key strategies or habits retirees can adopt to ensure their retirement benefits last through the entirety of their retirement years?
Okay, thank you for the question. When it comes to strategies, I would say that you can commit your strategies to God, and we believe that God will take you through. But the first strategy you can, I would want to emphasize on is on budgeting, and that's what Madam Lucy mentioned. It's very important for you to budget, and with budget, it helps you to control your expenses. So you don't spend on things that are not necessary. Okay, so what are some of the things that you consider in your budgeting? And some could include your health insurance. If you have any health challenge, health insurance will cover for that. You can also consider budgeting for your day-to-day expenses, your utilities, food, travel, and all that. And also, you can also consider housing, because there are some retirees who do not have a place of their own. And so you realize that with low pension, they'll still be paying rent. And so you would want to consider some of these things before retirement. The other one I would say is entertainment. You know, this is not a time for you to be hovering around, sleeping and doing nothing. You can travel, you can meet up with friends, you can have other engagements. And so entertainment is also very important when it comes to your budgeting. The second strategy I would want to say is to talk to a financial advisor or a financial planner. It's quite unfortunate that in our part of the world, it seems like we know everything. And so some people plan without telling their family, their friends, even their wives about what they want to do, so that they can see what view or what options they can also input in what they are planning. And so when you speak with a financial planner, they help you start early. They help you put in plans, put things in place, so that whatever plan you are doing will be fruitful. So say, for example, recently had a discussion with a retiree who is planning on building a house for a guest house business. Seems the location is quite good, so many people travel and they would want a place to sleep. So he wants to build a house, so he gives out for that purpose. However, his income, as in the money he's receiving at retirement, is not so much. And so when you put all your money into an investment of that sort and there is no liquid funds, what would happen if there is emergency? Okay, so when you speak with a financial advisor, they would tell you that even though your plan is good, maybe you can go about it this way or that way. Okay, so when you look at speaking with a financial planner helps you in your strategy. The third one I would want to mention is to reduce withdrawal even before retirement. Some people withdraw from their provident fund scheme for various reasons. And it's important that when you start working, you have different investment accounts for different purposes. You can have your savings account, you can have your pension account, and you can have an account for emergency. And so that you don't take emergency funds, you don't take your pension funds to address an emergency issue, so that when you retire, you wouldn't have enough funds, okay, for your retirement. So if possible, I would advise that you avoid withdrawal from your pension funds, so that you take advantage of the compound interest on the fund and also have enough funds for your retirement. And the last I would say as a strategy is to buy a program drawdown. So what is a program drawdown? It's simply an investment that allows you to draw down on a steady income, so that at any point in time, you are assured of some regular money coming to you when you, even at any point in time, every month or every quarter, based on how you would want it. When you have this plan, it will help you, gives you the financial peace of mind, like Auntie Lucy mentioned she has. So these are the strategies I would advise you take.
Thank you, Dinah. Thank you so much. Let's stay a bit on the budgeting and the program drawdown. Please throw more light on the Access Retirement Income Drawdown and how it's structured to benefit members or retirees.
Okay, thank you. So the Access Retirement Income Plan is a financial arrangement that helps retirees with managing their lump sum funds. And we know that at retirement, pension benefits come from the SNIT tier 1, you have tier 2 and tier 3. So usually the tier 2 and tier 3 are lump sum funds. And so statistics shows that many retirees tend to deplete their lump sum funds within 3 to 5 years. And you do not want to be in that bracket because the question is, what happens after the 5 years? Life may seem a bit unbearable. And so you want to have the ARIP investment plan where it's structured in such a way that it's very flexible. You can put in at least with a minimum of 50,000 Ghana cedis. Anyone can enroll on this plan. We can put you on the program drawdown based on how you'd want it. So you determine how the monthly payment income is done, the frequency, either monthly or quarterly, how long the funds should last, and who should benefit if you are no longer if you pass, okay, if you who should benefit if you should pass. The ARIP plan also helps you to avoid the risk of living beyond overliving your income. So it's structured in such a way that you can at any point in time, based on your financial needs, it can be increased, reviewed so that you have an increased amount, or you can have a reduced amount based on the performance of the investment. Okay, so is that flexible? And also where there is an emergency, you can actually fall back and make some withdrawal on your fund. That would mean that maybe the monthly payout or quarterly plan you are on would have to be reviewed, or maybe for some employees, some clients would prefer to hold on entirely because they've done huge withdrawal from their account, and that's how flexible it is. You can make additional contribution into your account so that based on increased review, so that if you were taking a 2,000 or a 5,000 cedis, if you want to be on a 10,000 out monthly payment, you can make additional contribution to that. So is that flexible? And enrolling is simple. With a minimum of 50,000, any retiree can have this plan structured in place. Yes.
Thank you very much, Dinah. With a minimum of 50,000 Ghana cedis, any retiree can enroll on the ARIP. Okay, so let's move on to the gentleman in our midst, Gideon. So on the survey that I spoke about, we looked at sources of income also, and pensions ranked first, no surprise there. But investment came in second with about 34% of the respondents. What factors should be considered when choosing an appropriate investment vehicle, bearing this in mind?
Okay, so thanks. And there's a very important question a lot of people ask because they want to make the right investment choice. Now, the first amongst the many factors investors can consider is regulatory and institutional safety. And the whole concept of investment is you are giving your money to someone you trust, a professional, and believing that the person will be able to turn around the money for you and give you, the required return you're also looking out for. So you want to work with someone who has been licensed in the country where you are or in the environment where you are located to provide such a service. And that's why it's very important. If you deal with people or firms that have not been licensed, it means that you are dealing with people that will be hard for you to go back to. If one morning you wake up and you go there and there's nobody there, there is nobody you can report to. So at least you want someone who has been passed through regulation and established so that you can be able to go and reach out to the person anytime you need your investment. And that would also make sure that whatever the person is doing is transparent. They have your interest at heart, and then also you have a robust investor protection framework you are relying on. The second thing that's also very important is your investment goals. Why are you doing this particular investment? I know we are talking about retirement, but within retirement, you may have your specific interest and goals that you have set for yourself. Will this investment you are doing be able to meet those investment goals and help you happily say that, yes, I've been successful in achieving them? If not, you need to think otherwise. The third thing I'll talk about is liquidity. You would, at a point in time, need these monies that you are investing for something, which is your investment goal. This vehicle you are investing in, is it something that can be able to provide that liquidity when that time comes? If not, you have to also advise yourself. And lastly, you also want consider your risk. There are certain investments that are very volatile. They can give you very high returns at the same time, can also give you very significant losses. If you consider your time horizon, do you have enough time to be able to withstand these volatile return profiles? You don't have to be doing things that are so aggressive, especially when you are reaching retirement. And so consider your risk tolerance and capacity. So just 4 things: regulatory and institutional safety, liquidity, risk tolerance, and then also liquidity status.
Great, great. Thank you so much, Gideon. Let me double down on the losses you mentioned, because about a quarter of the respondents identified investment loss as a significant challenge. So now we are asking, should retirees still pursue investment? And if so, why?
So it's interesting, but yes, you always have to pursue investment. Not pursuing investment alone, it's itself a risk. You are dealing with inflation, and what inflation does is it erodes your purchasing power. So if you are not investing, it means that you are putting money down, which would likely not be able to meet your investment objective, because at the time, if inflation has gone up significantly, your money becomes worthless. So not investing alone is a risk by itself. Now, there are other things you also need to consider. You just have to be cautious and strategic. And how can you do this? You can consider these factors. I mean, how long you are likely to live. If you put the money down and you are not investing it at all, you are likely to deplete it because you might live longer and spend it all. So you need something that would at least be able to increase your money for you in a moderate way. Let's consider something like basic, a return that will give you something that's pegged to inflation. By that way, you are not just eating into your capital, but at least you are increasing your capital at some rate. And that's what my colleague here spoke about when you invest in something like the ARIT plan. The other thing is, I've spoken about inflation already, but you also need to consider the aggressiveness of the investments you are investing in. You don't need something so risky. Diversify your investment portfolio, distribute it across several other asset classes. You can do some fixed income, some equities. There are several other investment options. Once you diversify, you reduce the rate of exposure to losses. So at least you can practice these things and continue investing, because not investing it by itself is a risk.
Yes, not investing is a risk. Okay, thank you, Gideon. I'll let you rest for a bit. Now let's delve into legal matters. So, Louisa, many people assume that estate planning is only for the wealthy. Can you explain to us what estate planning really means and why it's essential for every retiree, regardless of their income level?
Okay, thank you. Okay, so I think that's one of the myths about estate planning. I think in the context of what we are discussing today, Mr. Noy talked about beneficiaries, and all members are supposed to nominate beneficiaries. Nominating beneficiaries is part of estate planning. So if by doing that, then it means that we are all wealthy, which is a good thing. But estate planning is more than just giving away assets or deciding who should get the benefits of whether it's cash, houses, cars, shares, etc. Estate planning also includes your death wishes. So in terms of our cultural setting, typically when someone passes away, the family decides whether you should be buried in your hometown or whether you should be buried in Accra, whether you should be cremated or not. Estate planning, you can use estate planning to actually determine what happens to you. And you don't leave that decision to family members. It also involves putting in structure so that in the event that, for instance, you are sick, you fall into a coma, you have an accident, you are not able to take certain decisions, things like your dependents, who should look after your dependents, what happens to paying of school fees, etc. All those structures that you put in place to pass on that power of decision making to someone is also estate planning. And then when it comes to medical or health issues, we find that sometimes someone may have a certain preference that if I'm to go into a coma, do not keep me alive beyond a certain number of months or weeks. You can only carry those, or those wishes can only be carried out if you have a proper estate plan in place. Some of us love charities and our churches and other, I'll say, yes, I'll say charity activities. You can use an estate plan to plan how those charities get the benefits of some of your, I'll say, salary and maybe investment that you make. So the typical myth of estate planning only being the preserve of the wealthy is actually very wrong. And I think it's one of the things that we need to educate a lot of people about, because as long as you have assets, you have your salary in your bank account, all those things, you should be concerned about your estate planning. Some of us have liabilities in terms of bank loans, mortgages, etc. You need to plan for it in the event that you die or in the event that you become medically incapable of taking decisions. And even sometimes people through one means or the other lose the soundness of mind. So you need to put these structures in place so that if any of these is to happen, at least you know that you have trusted people who will carry out your wishes. So in a nutshell, I'll say that is why the notion that estate planning is just for the wealthy is actually a very wrong misconception.
Thank you. So that myth has officially been debunked. From your experience, what are some of the common mistakes people make when it comes to planning their estates, and what can retirees do to avoid them?
So in as much as it's not, estate planning can be a complex process depending on your assets and liabilities. And I would say that in as much as it can also be simple, because it involves you giving away your assets or giving your power to someone, the first thing I'll say is you should seek professional advice, either through a lawyer or a certified estate planner. And the reason is that they will be able to guide you. One basic thing is all of us know what a will is. In as much as a will can be very simple to draft, there's a law that governs what how a will should be constructed or drafted. And the professional person, whether a lawyer or a certified planner, can point you in the right direction. Because if you draft a will which expresses your wishes but does not comply with our Wills Act, the will not be accepted, and you end up basically your assets will fall into intestacy. So in as much as it may be simple, sometimes people may write a letter and say that these are my wishes without complying with some of these legal provisions. I talked about giving the power to someone. You need to draft a power of attorney. There's an act that governs power of attorneys. So you need a lawyer to guide you in terms of what should be contained in it. And also to make sure that, because sometimes you may give the power to someone just for a period. If you don't state that in the power of attorney, it can basically mean that the person has been given power for perpetuity. And those are some of the things and that members, or I'll say retirees, may make. Because of sometimes I'll say cost implications, people may choose not to engage professional services. Other mistakes that I found in practice is where you find a retiree maybe making a will or having an estate plan maybe in their 40s, and then maybe when they hit retirement, they decide to have another plan and they completely forgotten about the previous one. And therefore they make another maybe will or set up a trust or whatever without either expunging the previous one, and therefore make, I'll say, contradictory provisions, make provisions in the new one which contradicts the previous will that they've done. In a nutshell, I think all these things can be avoided if retirees, if they need that further assistance.
Thank you very much, Louisa. So it's very key that we seek professional help in planning our estates. Okay, so let's circle back to Madam Lucy. So, Madam Lucy, what do you wish you could have done better before retirement? Are there any things you wish you could have done better?
I would say, yeah, what I could have done better. And I think maybe this is where you guys come in. My organization, we were on the 3-tier pension scheme. So, it's a deduction from your salary with your employer topping up into the 3-tier system. What I could have done better if I knew of private pension schemes, such that I would have also invested into those private pension schemes outside my employer to be able to build sufficient funds for my retirement. So I would have actually preferred if there were private pension schemes. At the time, I didn't know about ARIB or ARB. It was during the tier 2, tier 3, what you call lump sum, that I was spoken to it about it, to say that, look, can you put part here and get this? But if I had known earlier, I would have even started investing long ago into it to have a better retirement plan. What else could I have done better? Yeah, I think it's more of investments to even have a bigger pension at a bigger retirement income at the end of it. Yeah.
Thank you. Thank you so much. So this is a word to us all. There's a real life person living her retirement journey. We've got to plan. And Axis, we are here to assist you plan towards that beautiful retirement. Okay, thank you, ma'am. So please, I'll come back to you again, but let me take a question from Dinah. So how flexible? Madam Lucy again mentioned the ARIP, that's the Access Retirement Income Plan, right? So how flexible is this Access Retirement Drawdown? How is it? How flexible is it?
Okay, thank you for your question. I'd want to mention that starting early is important. Okay, so there are some retirees, when you discuss Arab with them, they would mention that 50,000 is too much. Oh. So the scheme allows you to make regular contribution into an account so that you'll be able to accumulate the minimum 50,000. So by the time you get to retirement, you would have had that 50,000 to start the plan. Okay, so there are some clients, you would have discussion with them even before retirement, and they would say that, oh, okay, so even though 50,000 seem too big, you can do monthly contribution, let's say 200 cedis every month for the next 10 years. Now, approximately, if interest rate is hovering around 12 to 13%, if you do 200 cedis every month, for the next 10 years, you are likely to get about 50,000 cedis in your account. So even though some employees would still say that, oh, 10 years is too long. How can you save for that long? But then I would also ask, about 8 or 9 years ago, we joined a queue to vote for a president, and he's no longer the president now. There's a new president. So I remember when I joined that queue 8 years ago, and 8 years had just passed. And so retirement is closer than we see, and so it's good for you to start early so that you'll be able to accumulate the minimum 50,000 to join the scheme. Now the flex is so flexible in such that aside making regular contribution into your account, you can actually do a drawdown that would help with your financial changes. So if, say for example, you are on retirement and you have children who are still in school, you would want to consider the quarterly payout. So the quarterly payout will give you some money to cater for some, based on your needs. We give you that amount on quarterly basis. If the children are no longer in school or they're out of school and the stress is down, you can review it to a monthly payout. Okay, it is also flexible in that for you, maybe you do not want this monthly or a quarterly payout. You'd want an investment that would give your money some steady growth, and also as and when there is a financial need, you can fall back to make a withdrawal. So the scheme allows for monthly payouts, it allows for quarterly payouts, it allows for as and when you have urgent need for money, you can put in a withdrawal request to make the withdrawal. There is also the investment and the growth as well. So you could say that your money is being invested. Aside the money that is paid out to you every month, you have some steady income adding up to your principal. So we could see that there is some growth and also a little bit of capital preservation in there. So in the long run, you tend to benefit in the long run than just taking everything and spending within the shortest possible time. So that's how flexible it is. Adjustment to your lifestyle, increment or reduction based on how you'd want it. So it's what you determine how you what you want to do and how the plan would fit into your goal. Yes, please.
Great. Thank you, Dinah. Thank you. So Gideon, since you said not investing is in itself a risk, what are some of the investment options a retiree should consider, or someone approaching retirement?
Okay, so I guess by now, everyone has heard about our ARID investment program. That's not the only one on the market. We have fixed income investments people can consider, because during retirement, you are looking at preserving your capital, you are looking at stability, and on top of it all, you are looking at income. So fixed income investments are very key. Fixed income, you can go direct by investing in government bills and notes, or you can also do indirect through mutual funds. There are fixed income mutual funds that are existent in our markets, a lot of them, which are all, just make sure you are dealing with a regulated and a licensed product. There are also pension designed investment products which you can look out for. They have been purposely designed to serve your pension needs. So you can also look at them. And the benefits of using those ones is you have a dedicated professional who looks into the market and ensures that the right investment is done for you. So you can look at fixed income, mutual funds, pension designed investment products, but speak to your advisor before you engage in any of these investments.
Thank you. Speak to your advisor before you engage in investments. Louisa, please, let's come to you. What are some of the key documents or steps an individual should have in place to ensure that their assets and wishes are properly managed after they are no more?
Okay, so typically when you start the process of estate planning, you should have simply like a ledger which you keep updating, just like you update your beneficiary details. You should have some sort of a ledger that keeps track of your assets and your liabilities. And also proper document record keeping is critical, because we find sometimes our parents may give us shares and we can't find share certificates, and we go to the companies and the companies also may not have any records for us to fall back on. So keeping proper records and documents in terms of the assets that you own. If it's also even a loan or a liability, you should still keep records of it, because you could be owing 100,000 and the creditor can say you owe 200,000. So it's good to keep a record of all those things. And then in terms of even your beneficiaries, I think the representative from Senate made a very good point in terms of children, whether born out of wedlock or in wedlock. The law does not distinguish. So if you happen to have children out of wedlock, make sure that you also keep a ledger on them and include them when it comes to nominating your beneficiaries, because the law does not allow you to place that burden or responsibility on society. So in terms of who you want to benefit, either through a will or even your pension, or for those who have insurance as well, just make sure that you keep a proper list of all those people so that you don't leave anyone out. And then after you go through the process of estate planning, the documents, you need to have a safe place to keep them. And make sure that you have a copy. Your lawyer or certified planner also has a copy. Sometimes copies can also be filed in courts or with reputable institutions who keep documents safe for you, so that in the event that anything happens, at least we know where to find those documents and ensure that your wishes or instructions are followed through.
Thank you, Louisa. Okay, so in wrapping up, let me just ask my last batch of questions. So, Madam Lucy, I'm back to you again. So how have you adjusted to retirement? How have you adjusted to retirement? Let me put these two questions in one. And what from your working experience, how have you been able to put it to advantage during your retirement?
In terms of adjustment, I think that sometimes when people are going on retirement, they are very apprehensive of the unknown. But retirement is something that will happen. So you need to prepare your mind that a time will come when you retire. So how have I adjusted is redefining my purpose. So I take it that retirement is not is just an end of a certain working life, but a beginning of new opportunities. So there are a whole lot of opportunities out there. When you are working, you normally would have structure and routine. So I get up 8 o'clock, I'm in the office, I have a meeting, I work, I'm called a manager, I'm called the head of department. After retirement, all this structure, titles go away. But it's an opportunity for a new beginning. How can you start this new beginning? You can actually turn your passion into something very viable. So I have a whole lot of experience. I've been working for 30 years. 30 years experience is not a joke. So I can use that to mentor the young ones. And it gives me a very fulfilling life because I tell them the stories of work, tell them my challenges, tell them my what you call successes, help them navigate. So I mentor young ones. I also indicated earlier on that it doesn't mean when you're on retirement is the end of learning. Learning is a continuous journey. And so I continue to read. I take online courses. Like I said, I just recently completed an online course on AI, because AI is what everybody is talking of now. And I just didn't want the young ones to think that I'm old and I don't know anything about AI. So I took a course in AI and I'm very happy I took the course. So learning, continuous learning and development. Also, what you can do to make your life meaningful is, with all that experience, I can write books. I can write my memoirs. I can turn my passion into even something that gives me, what do you call it, income streams. Doc talked about a chef who what you can take cooking classes or teach cooking class. That's something you can do, and it's so fulfilling because now remember that you are pacing your time, and then there's no that pressure. You are doing what you really love. And sometimes that can even generate money. So there are a whole lot of opportunities that you can do on retirement. So we don't see retirement as an end and get into depression because your routine is, what do you call it, now not balanced. Now, I have structured myself in such that I really have gone into a routine. And if I can just give an example, I told you about exercise, diet. Now I wake up at 7 o'clock. I have my breakfast. I prepare my breakfast. So now it's not grab and go to the office. I prepare my breakfast, vegetables and fruits. After that, I go to the gym because, like Doc said, my area, there are cars and you don't want any Okada to come and knock you down. So I've invested in going to a gym, and 4 times in a week, I go to my gym, exercise, come home, I have work to do because, like I said, some of the things you can do is to teach. You can be on boards, you can be on NGOs. So I'm on a number of boards. There are board packs I have to read and prepare for a board meeting. So I sit within a certain period, read, research to be able to contribute to society as well. Then I prepare my dinner. Again, I do it myself, so I know what to do. Then I just make it a point that after 8 o'clock, no work, nothing. I just relax and then have. And if I check myself, because I have my watch to check, I do averagely 7 to 8 hours sleep a day. You see, and that helps because when I do the exercise, I realize that days that I go and exercise and I'm exhausted, I'm able to sleep better than when I'm. So I'll say repackage my whole life such that I've built routine and structure in it, and there's some meaning in my retirement here. Yeah. So that's what I would say.
Wow, wow, thank you. You've really adjusted very well. Thank you. What I took is redefining your purpose, then mentoring, passing on the legacy to the next generation. Thank you so much, Madam Lucy. Now, Dinah, let me quickly ask you, briefly, for someone approaching retirement, what's the process for enrolling on the ARIP?
Okay, thank you. So the first step to enroll on the Access Retirement Income Plan is to have a discussion with a financial planner. Now, the discussion is going to focus on your income, your expenses, your needs, your family, if you have children, their education, their level of education, just to assess what money comes in and how you spend. Now, once we've established that you can make room for the Access Retirement Income Plan, we start with the documentation and account opening. So you complete the Access Retirement Income form. You complete that with your beneficiaries. Then the account is set up. You add your bank account details. Then you select which scheme you would, or which drawdown plan you want to enroll on, either the monthly, quarterly, or you would want to keep your funds invested. And as and when you need funds, you make a withdrawal. So once the drawdown plan or program is established, you will proceed with transfer of funds into your account. And like I said, the funds can be from your tier 2, your tier 3 provident funds, or from any other investment you have with any other investment institution or in your bank account. So you transfer the funds to activate your account. The account details is shared with you, and at any point in time, you can access your account to check what goes in, what goes out, and you can actually make reviews at any point in time. There is ongoing monitoring with your financial planner to ensure that if there is any irregularity or if there's something you do not understand, you can at any point in time reach out to us, either via phone call. You can walk into our office to have a face-to-face meeting with us. You can send emails. You can reach us through any of our online social platforms at any point in time. And so we are in constant communication with you so that whatever is not clear to you, we make it, like Gideon said, it's so transparent so that you can have at any point in time what you need addressed. Yes, please. So that's how to enroll and the consistent monitoring. Yes.
Thank you, Dinah. You can always reach out to us and we'll be glad to take you through the steps. Gideon, is it too late to start planning for retirement in terms of investment? Is it too late?
It's never too late. And I think I read this way that when you realize it's never too late or to act. So okay, so I read somewhere that once you realize never late to so too late to start investing. There are a number of things that you might have to consider if you are late. And one is once you're late and you are closer to your retirement, you need to sit down and do all the things my colleagues have spoken about, your budgeting, your financial plan, so that you're able to ascertain where exactly you are, where you want to, you are going to get. That would also provide you clarity on what exactly you if it's even in terms of returns that have to be generated, what you need to do what you need to achieve to be able to meet the objectives. A lot often, what happens is when people starting late, to adopt all forms of alternative investments. And trust me, getting closer to your retirement and even at the beginning of your retirement, that's when you get all the innovative business ideas you want to engage in. My only advice is whatever you would want to engage in during retirement, don't wait and get to retirement before you begin to actively start. Start it whilst you are getting closer so that you have it running, you learn from it, and then during your retirement, you can manage it better. A lot often I've had to discuss transport business with retirees. Someone who has never engaged in a transport business of a sudden feels that I need regular income. And when I get a transport business, I've heard sales of 300 cedis a day. If I get that 300 cedis and multiply it by 30 a month, oh, I'm fine. Then they buy a car and start. And that's when they realize that it is not as straightforward as they had. So don't let desperation also set in, and it is never too late to start.
It is never too late to start, and don't let desperation push you into the wrong hands. Louisa, our last question for the day. So for someone who has not yet started their estate planning journey, what practical steps should they take, and when is the right time to engage a lawyer or a certified planner?
Okay, so I think in the context of what we are talking about, first and foremost, for those who don't have beneficiaries with us, please update your information and nominate a beneficiary. Secondly, for those who already have beneficiaries and have, I'll say over the period, had maybe more children, or you've either married, divorced, etc., update it. You can change it as many times as you want. There's no limitation in terms of the update. So I'll say first and foremost, that's the first step. When it comes to your other assets, the time to start is now. As long as at least you are working, have a bank account that each month your salary goes into, you have some money sitting somewhere, that you should have the power and exercise control as to what happens to that money. We have children. We need to think about, God forbid, if anything happens to us, who takes up the guardianship rights, our health care needs, our liabilities. So the time to start is now. So in terms of engaging with someone, Access, we are here. We have a team that can point you in the right direction. We also have a sister company, Access Wealth, and there is a department that also helps with estate planning. Beyond that, we have also good contacts with other law firms that we can point you to, who can assist you in your estate planning journey. And the time is now. I always say that we have a PNDC law 111, which takes care of those who do not plan their estates, and for those who die intestate. At the time the law was passed, it was a good thing, but it's a 40-year-old law. And times have changed, and the practicalities of implementing that law is not the best. So I would advise you not to allow your estate to fall into intestacy. So please take action now, and Access is here to assist you in starting the process.
Thank you very much, Louisa, and a very big thank you to all the panelists. Okay, Gideon.
Yeah, so I just wanted to add something to what Louisa said. So at Axis also, we have a boutique service which is meant for high net worth individuals. And as part of the service, you get the services of Louisa, the legal expert, who provide you the estate planning. You will also have the service of wealth advisors who help you with your financial planning and then investment execution. The beautiful thing about Access Wealth Management is that we use global financial securities in providing the wealth solutions to our clients. And so you get to experience an investment landscape, an investment in an economic landscape that is different from what we have in our emerging markets here. It's absolutely a USD opportunity that people can take advantage of. So you can reach out to us for this customized bespoke service and then also get access to global markets.
Thank you. Thank you so much. To our panelists, we are very grateful for sharing your insights and experiences. And to everyone who joined, we say thank you so much. We started this program with God, and He has brought us to a successful end, and we are so grateful. At Access, we want you to reach us so conveniently, and we have so many channels for us to reach us on. So you can still reach us on our call center numbers. You can reach us on 0302 738 555. I repeat, 0302 738 555. Or you can call us on our toll free also, 0800 00 1860 or 0800 00 1860. Our website is also accessible to you. You can initiate a live chat with us via our website at www.accesspension.com. And as Gideon also said, you can reach us, the Access Wealth Management, also at info@Access Wealth Management. The management is NGT, info@accesswealthmanagement.com. It's been a great pleasure and an honor to be with you this year also. Thank you so much for staying with us. My name is Ekwope Imbedu, and I've had a pleasant duty of being your MC. Thank you.
Benefits in 3 years? Without a solid plan in place, you risk depleting your savings prematurely, leaving you financially vulnerable in your later years. But your golden years can be better with the right plan. Guaranteed monthly income, tailored just for you. Choose between flexible payout options backed by expert guidance to secure your financial future, because your golden years should be full of peace, not worry. Add a golden glow to your golden years by enrolling on the Access Retirement Income Plan and enjoy the retirement you deserve. Call 03-0273-8555 to speak to a pension advisor today. Access Pension Trust, your reliable partner in pensions.
Dear future me.
Dear future me.
Dear future me. I hope you are living the life you dreamed of. Finally, running the business you've always wanted, waking up each day with purpose, and enjoying the freedom you worked hard for. I hope that your efforts over the years led to a life well earned.
I hope life didn't get too busy, that you finally got to travel and see the world, to feel the ocean breeze and enjoy the feeling at the top of the mountain.
I hope you built the home you always wanted. A place where every corner holds a memory and every wall tells a story. A haven filled with love, warmth, and family.
Your future self is counting on you. Fulfill your promise of a better tomorrow by taking action today. Start saving with Access Pension Trust to achieve financial peace of mind. Visit www.accesspension.com/futureme to learn more. Access Pension Trust, your reliable partner in pensions.